Auchincloss doing a audiovisual check.
Good morning, Mr. Auchincloss. You're good to go.
Good morning.
Morning. How you doing?
Oh, I guess okay. It's crazy. I had my second COVID. You feel? You good?
No, yeah, I understand.
Yeah. You look skinny though.
Okay, gotcha. I need to.
Uh,
Good morning, Mr. Garcia. Can I please have audio test?
Good morning. Can you hear me?
Yes, I can. You are good to go. Thank you.
Thank you.
Good morning, Mr. Gonzalez. Can I please have?
The committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any point. Pursuant to Committee Rule 3 and House Rule 11, the chair may postpone further proceedings today on any vote relating to any matter under consideration during today's markup. We will be distributing both hard copies and electronic copies of amendments to ensure all members have access to the relevant documents in this hybrid format. All amendments must be submitted to the committee email provided in the meeting notice. As is the chair's practice, amendments that are pre-filed will be given priority consideration. Without objection, all members will have 5 legislative days within which to revise and extend their remarks and to submit additional materials to the chair for inclusion in the record. Before we begin today's markup, I just want to recognize Mr. Caston's absence as he and his family grieve the death of his beloved daughter. I think I speak for the whole committee in extending our deepest sympathies and condolences to him and his entire family as they process this tragedy. And of course, we will respect his request for privacy during this difficult time. I now recognize myself for 5 minutes for opening remarks. Today, this committee will consider a number of bills to reduce housing costs, save lives, put consumers first, support small businesses and entrepreneurs, and protect whistleblowers. As we mark Home Ownership Month this June, I want to acknowledge how the sharp increase in home prices have exacerbated barriers to home ownership. To reduce these barriers, we will mark up my bill, H.R. 4495, the Downpayment Toward Equity Act of 2021, which would authorize $100 billion to provide financial assistance to first-time, first-generation home buyers to put towards a down payment for a home. We will also mark up 2 more bills that will also help reduce housing costs for families. These bills include H.R. 3111, the Grandfamily Housing Act, led by Representatives McGovern and Pressley, which would authorize $100 million to support the housing needs of intergenerational families, and H.R. 68, the Housing Fairness Act, introduced by Representative Green, which would provide significant new investments to fight housing discrimination and segregation and help make housing more available and affordable for everyone. Additionally, to ensure the safety of the lives of families in federally assisted housing, we're marking up H.R. 6528, the Housing Temperature Safety Act of 2022, led by Representative Torres, which would establish a pilot program at HUD to install and study the efficacy of temperature sensors in federally assisted housing, as well as H.R. 7981, the Public and Federally Assisted Housing Fire Safety Act of 2022, a bipartisan bill led by Representative Dean that would require the installation of tamper-resistant or hardwired smoke alarms in federally assisted housing. With this markup, we will also continue this committee's effort to put consumers first by marking up H.R. 4277, the Overdraft Protection Act, led by Representative Maloney, which would strengthen disclosures to consumers under the Truth in Lending Act and protect consumers against exorbitant overdraft fees. In addition, H.R. 5912, the Close the ILC Loophole Act, a bipartisan bill introduced by Representative Chuy Garcia, would close a loophole that puts consumers at risk by allowing commercial firms to open and operate FDIC-insured banks as industrial loan companies without being subject to the same supervision that traditional banks are subject to under the Bank Holding Company Act. We also continue this committee's work to support small businesses and entrepreneurs that are the backbone of our economy. My bill, H.R. 7977, Promoting Opportunities for Non-Traditional Capital Formation Act, aims to do just that by requiring the advocate for small business capital formation at the SEC to assist traditionally underserved small businesses and those led by entrepreneurs of color on how to raise funding within our securities markets. And as the pandemic continues to harm small businesses around the country, Representative Lawson's bill, H.R. 6814, Small Business Fair Debt Collection Protection Act, would amend the Fair Debt Collection Practices Act to extend protections to small businesses that are currently in place for individual consumers to guard against predatory debt practices. Finally, to promote a culture of accountability by protecting whistleblowers, we will also mark up a bill led by Representative Adams, H.R. 7195, entitled to provide for certain whistleblower incentives and protections, which would modify the structure and function of the Financial Crimes Enforcement Networks, or FinCEN's, recently mandated whistleblower program. We will also mark up a bill by Representative Wagner, the Risk-Based Credit Examination Act, to empower the SEC to more effectively oversee credit rating agencies. The bills we are marking up today will benefit working families all across this country, building on House Democrats' efforts to address the rising inflation by reducing the cost of housing, preventing corporate price gouging, and holding bad actors accountable. I now recognize the ranking member, Mr. McHenry, for 5 minutes for any opening remarks he may have.
Well, thank you, Madam Chair, and thank you for holding this markup, and welcome back. We're glad you're in good health and you've come through very well. And I concur with you. We have our friend and colleague, Mr. Caston, in our thoughts, our prayers, and his family as well. So thank you for noting that as well. We have jobs to do, we do, but there are humans behind these jobs, and family is so important to all of us. And so we're pulling for Mr. Caston and his family. Look, today's markup is a lot of the same themes we dealt with on the House floor. America is in the midst of an inflation crisis, an energy crisis, a supply chain crisis, a labor shortage crisis. But here we are again, debating bills that will do nothing to address any of those key issues. Last week, Democrats had a bill on the House floor to, quote, address inflation and help bring costs down for Americans, end quote, according to Leader Hoyer's schedule. Just last month, President Biden stated that inflation is his, quote, top domestic priority, end quote. And to kick it off, well, Secretary Yellen admitted she was wrong when she called inflation transitory last year. And we have the chair of the Federal Reserve coming in tomorrow. So this, like last week, is inflation week. And just like every week for Americans over the last year and a half, it's inflation week if you're buying anything or trying to live your life. So Republicans welcome this conversation. In fact, last week on the House floor, Republicans used...
Will everyone please remain muted while Mr. McHenry is making his presentation? Can you hear me? Please remain muted while Mr. McHenry is making his presentation.
Thank you, Madam Chair. Look, this month we learned the Consumer Price Index reached 8.6% for the last 12 months. And this is the highest level in more than 40 years. Everyday goods and services are unaffordable for low and middle income Americans. Real wages have fallen 3.4% as consumer prices increase faster than wage gains. In fact, U.S. households will spend an extra $5,200 this year as compared to last year for the same basket of goods and services. The national average for the price of gasoline is hovering around a staggering $5 per gallon. Gas prices have more than doubled since President Biden took office, and let me be clear, that's not since Putin invaded Ukraine, it's doubled since Biden took office. As if that weren't bad enough, our economy is shrinking. In the first quarter of this year, U.S. GDP came in at a negative 1.4%. But my colleagues across the aisle already know all of this, and they've invited this conversation. Unfortunately, once again, their words do not match their actions. Look no further than today's markup agenda. Not one of the bills we are discussing today will bring down the cost of food, gas, or housing. Instead, we are here today with another grab bag of bills that look very similar to an end-of-year markup intended to clear the decks and score some political wins for your members in a political year. It's unclear what my Democrat colleagues are really trying to accomplish other than that political piece. How does establishing a $100 billion down payment assistance program keep housing costs down or not exacerbate inflation? How does putting small businesses under the microscope of the unaccountable Consumer Financial Protection Bureau address the pain at the pump? How does putting more limitations on financial institutions with respect to their business models help make credit cheaper and more readily available for consumers who need it most? Families are hurting, and this is the list of bills we have on the docket today. This isn't to say that some of the policies we're discussing aren't important. I appreciate the work of the gentleman from New York, Mr. Torres, on temperature sensors, and the work by the gentle lady from Pennsylvania, Ms. Dean, to ensure updated smoke alarms are in federal and public housing facilities. Those are reasonable things and necessary. But at the end of the day, the American people want to know that we're doing the work of combating inflation and putting money back in their pockets. In fact, 80% of Americans say inflation is the most important issue facing the country, and that's according to the ABC News Ipsos poll. And Republicans hear the cry of those American people. So we will use today's markup to discuss the real issues impacting American workers and families. And I welcome my Democrat colleagues to abandon their partisan priorities and that have no chance of becoming law and join us in this fight against inflation. And so with that, Madam Chair, I yield back and ask a point of personal privilege to welcome our newest member.
Without objection, such is the order.
Thank you, Madam Chair. I want to take a moment to recognize our newest member of the committee, Mr. Norman of South Carolina, my neighbor just to the south. Mr. Norman has extensive experience in the financial services sector as a home builder, and the work that he's been about as a leader of a community bank. And he spent decades building and growing that successful real estate business and his engagement in upstate South Carolina and the Charlotte region. And so when he's not here in D.C., rest assured he's busy with his 17 grandchildren. So, Ralph, welcome to the committee, and thank you for being here. Yield back.
Thank you, Chair McHenry. I would also like to welcome Mr. Norman to our committee. I look forward to working with you, and I particularly hope that we can find some common ground on housing, considering your background in the real estate industry.
Madam Chair, parliamentary inquiry about today's schedule.
Gentleman is recognized.
Thank you, Madam Chair. We know that floor votes have complicated what was already a complicated couple of days, and just wanted to see if there are some expectations the chair has on member schedules and how you want the day or 2 days or 3 days or whatever we're going to be here, how that looks, what that looks like.
Well, thank you very much. We have given considerable thought to this, and even though this is not a proper parliamentary inquiry, but I'm happy to answer. We will continue our markup until votes on the floor around 1:30. We will resume the markup immediately following that vote series, and we hope to finish debate on all bills before the next vote series on the floor around 5:45 this evening. If not, We will resume tomorrow, immediately following the Humphrey Hawkins hearing tomorrow, which has a hard stop of 1 o'clock.
Thank you, Madam Chair.
You're certainly welcome. So pursuant to notice, the chair now calls up the bill from the gentlewoman from North Carolina, Ms. Adams, H.R. 7195. The clerk will report the bill.
H.R. 7195, a bill to provide for certain whistleblower incentives and protections, be it enacted by the Senate and House of Representatives of the United States of America and Congress assembled.
Without objection, the first reading of H.R. 7195 is dispensed with. The gentlewoman from North Carolina, Ms. Adams, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed. In advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 7195, offered by Ms. Adams of North Carolina. Strike all after the enacting clause and insert.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentlewoman from North Carolina for 5 minutes to explain the bill and her amendment.
Thank you, Madam Chair. Before I get too much further, let me take a brief moment to thank my good colleague on the other side. My colleagues in the other chambers, Grassley of Reverend Raphael,
Please unmute so that we can hear you, Ms. Adams.
Cannot hear me?
What?
Cannot hear me?
The gentle lady cannot be heard. Would you please test your volume if you can hear us? There appears to be a problem with the volume. And so until we can get it corrected, we're going to move on, and we'll come back to this bill and this amendment. Can our technical individuals, whomever you are, help with this issue? I am informed we cannot move on. We've called up the bill.
And, well, Madam Chair, if you wish to, have the unanimous consent request to withdraw the bill, I don't think there'd be objection on the Republican side of the aisle. I would also, Madam Chair, just offer that if you're in your office and you just want to walk down to this hearing room, we're pretty well spaced. And those of us that are taking health precautions are wearing masks. So pretty safe space here, a lot of space.
Okay.
Traditional markup style.
Thank you for your assistance, Mr. McHenry. I ask unanimous consent to move on, and we will return back, and I'll move on to the next.
No.
Madam Chair, I don't think members on the Republican side would object to just passing the bill. I don't.
Come on, give me, I need a mouse.
Do I hear an objection to the unanimous consent request?
What is the unanimous consent request?
Unanimous consent request?
Yes, Madam Chair,
The gentle lady is back. Thank you.
I'm on another computer, but thank you very much. Before I get any further, let me just thank my colleague on the other side of the chamber, Representative Gonzalez of Ohio, and Representative and Senators Chuck Grassley and Reverend Raphael Warnock of Georgia. I'm grateful for your partnership, and I'm proud that we were able to work together. I want to also thank you, Madam Chairwoman, for your assistance and for the assistance of Daniel Lindholm on your staff. I'm proud to introduce this amendment in the nature of a substitute to my bill, H.R. 7195. This bipartisan, bicameral legislation provides a proven solution to improving the whistleblower fund of the Financial Crimes Enforcement Network, FinCEN. And so when we passed the Anti-Money Laundering Act of 2020, just 18 months ago, the Congress made critical improvements to the enforcement of Bank Secrecy Act regulations. FinCEN's whistleblower fund was designed to pay awards to the brave souls who too often risk their livelihoods and their lives to report criminal wrongdoing that they witness. So unfortunately, we have found that FinCEN's award model, which we implemented in 2020, AMLA, has been so far insufficient to meet the statutory requirements. So I'm proud to say that this legislation brings FinCEN's fund in line with other successful funds currently operating in the federal government and will substantially aid FinCEN as it executes its congressionally directed mission. First, we had to prime the whistleblower fund with a substantial appropriation. And so this legislation removes that requirement by creating a financial integrity fund within FinCEN that will hold funds collected from awards, ensuring that whistleblowers will be able to immediately receive awards when the government collects payments from successful enforcements. We put good government guardrails up around the fund to ensure that the collected dollars in the Financial Integrity Fund can only be used to pay whistleblowers. Second, this legislation ensures that all whistleblowers who come forward with information that leads to successful enforcement receive their fair share. We do so by creating a floor for awards at 10% of collecting fines and capping it at 30%. Currently, no floor exists for awards, which means that some whistleblowers who risk everything never receive a penny. So this makes it harder for whistleblowers to attract skilled legal representation. It's hard to ask someone to risk their lives and their livelihoods if we can't ensure that they're fairly compensated for their bravery. And so, as the chair of Education and Labor Subcommittee on Workforce Protections, it's absolutely critical that we take care of whistleblowers who might endanger themselves for doing what's right. Madam Chair, before I yield back, I want to briefly say that I'm also proud that this legislation is endorsed by organizations like the National Whistleblower Center, Taxpayers Against Fraud, the Government Accountability Project, the Project on Government Oversight and Transparency International US. We have worked hard on this legislation. I hope that we can all get behind these common sense reforms that will make sure that our government works better and smarter for everyone. There are too many bad actors out here who try to hide their dirty money, and this legislation will help law enforcement and others identify the vulnerabilities in our financial institutions and those that would seek to abuse the system. So, Madam Chair, with that, I yield back. I look forward to answering any questions that my colleagues may have, and I thank you for this opportunity.
Thank you very much. Is there further discussion of or amendments to the amendment in the nature of a substitute?
Move to strike the last word.
The gentleman from Ohio, Mr. Gonzalez, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and thank you to my colleague, Ms. Adams, for her partnership on this legislation. I've had the opportunity to work with her and her staff a few times now this Congress on legislation that has garnered strong bipartisan support. She, of course, also is an Ohio State graduate. Just speaks for herself how wonderful and collegial she is. This just highlights what we can accomplish when we commit ourselves to working across the aisle with the intention of getting legislation signed into law. This bicameral, bipartisan legislation will strengthen our whistleblower programs to combat money laundering and provide law enforcement information to better protect our country. This bill will make sure that whistleblowers receive at least 10% of the value of fines collected from their willingness to speak out, compared to current law that has no minimum award. We should be doing more to incentivize whistleblowers to come forward and ensure that they are rewarded for their bravery and commitment to justice. I again thank Ms. Adams for her partnership on this legislation, encourage my colleagues to support the bill, and I yield back.
Thank you very much. Is there further discussion? If not, I recognize myself for 5 minutes. I want to thank Representatives Adams and Gonzalez for offering this bipartisan bill, H.R. 7195, a bill to provide for certain whistleblower incentives and protections. This committee unanimously created the whistleblower program when we passed the Anti-Money Laundering Act of 2020 in an effort to combat abuse of anti-money laundering laws and to bolster enforcement of Bank Secrecy Act regulations. As currently written in the statute, awards are capped at 25% with no minimum for a successful claim. It turns out that this formula is not achieving Congress's desired goals. According to the National Whistleblower Center quote, it is highly unlikely that persons with relevant information relating to illegal money laundering and financing terrorism will risk their livelihoods, reputations, and the potential of high litigation costs without reasonable financial assurances, end of quote. Further, according to the Wall Street Journal, without a guaranteed fee-covering incentive, lawyers who specialize in representing potential whistleblowers have been declining to represent possible clients and claims. This bill remedies this issue by ensuring that whistleblowers who reveal information on money laundering receive awards of 10% to 30% of the fines imposed due to their information, which is similar to the successful whistleblower program at the SEC. So I urge members to support H.R. 7195, and I yield back the balance of my time. Is there further discussion of our amendments to H.R. 7195? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 7195 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it.
Thank you, Madam Chair.
Pursuant to notice, the chair now calls up H.R. 7981, the Public and Federally Assisted Housing Fire Safety Act of 2022. The clerk will report the bill.
H.R. 7981, a bill to require qualifying smoke alarms in certain federally assisted housing and for other.
Without objection, the first reading of H.R. 7981 is dispensed with. The gentlewoman from Pennsylvania, Ms. Dean, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 7981, offered by Ms. Dean of Pennsylvania. Strike all after.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentlewoman from Pennsylvania for 5 minutes to explain the bill and her amendment.
Good morning, and thank you, Madam Chair. Good to see you and know that you are well. I also want to offer my condolences to our friend Sean Caston and his whole family as they struggle through their loss. So thank you, Madam Chairwoman. I rise in support of my bill, H.R. 7981, the Public and Federally Assisted Housing Fire Safety Act. This bipartisan legislation would help protect the more than 10 million Americans who live in public or federally assisted housing from the risk of fire by requiring the installation of hardwired or tamper-resistant smoke alarms in federally assisted housing. I joined with my colleagues from southeastern Pennsylvania, Representatives Dwight Evans, Brendan Boyle, Brian Fitzpatrick, and Mary Gay Scanlon in introducing this important legislation as our communities were devastated earlier this year by a horrific blaze that occurred in a public housing unit. In the early morning hours of January 5th, a fire broke out in a Philadelphia row house owned by the Philadelphia Housing Authority, killing 3 sisters and 9 children. My heart breaks for this beautiful family. They were loving mothers, aspiring students, babies only 2 and 3 years old. I'd like to enter a Philadelphia Inquirer article remembering those lost in the Fairmount fire into the record, which gives a glimpse into the lives we lost in this tragedy. And I'd like to take a moment to remember them and simply say their names. Rosalie Rose McDonald, 33, a loving mother to 6 children, all of whom perished in the fire. Her children, Quinton Tate McDonald, 16, Destiny McDonald, 15, Daquan Day Robinson, 8, Jaquan J.J. Robinson, 5, Tanisha Robinson, 3, Tiffany Robinson, 2, her sister Virginia Jenny Thomas, 30, a loving mother to 4 children, 3 of whom perished in the fire. Her children, Natasha Wayne, 7, Shanice Wayne, 10, Janiyah Roberts, 3, and their sister, Kenesha White, 18, younger sister to Rosalie and Virginia, still a senior in high school when she died. Heartbreakingly, as the facts around this fire emerged, it became clear that these tragic deaths just maybe could have possibly been prevented with proper safeguards. Just maybe. After all, of the 7 smoke alarms in the row home, all of which were the kind that require frequent battery replacement, 4 were in drawers, 1 was on the floor without batteries, 1 was in the ceiling without batteries, and a final fire alarm was working but located in a basement. This situation is sadly not an isolated one. As we all know, 4 days later, 17 people died in a high-rise residential fire in the Bronx, 44 people injured. According to the 2015 HUD data on the top 25 deficiencies in public housing, missing or inoperable smoke detectors was the 15th most prevalent deficiencies. In 2020, an ABC News investigation found that more than 1 million people in the United States are living in federally funded housing complexes that inspectors found had fallen short on working smoke detectors. It's clear that the status quo is not keeping families safe. My legislation is needed to raise the bar to ensure that the 10 million Americans who live in public or federally assisted housing have the basic life-saving benefit of a working smoke alarm. This bill would also authorize $2 million for HUD to run a national educational campaign on health and safety requirements in public housing, including how to properly use fire safety features like smoke alarms, carbon monoxide detectors, and self-closing doors. I am pleased to have the support of key stakeholders, including the International Code Council, who provided guidance in drafting this bill, the National Fire Protection Association, the National Association of Fire Marshals, the International Association of Firefighters, the National Fallen Firefighters Foundation, and the National Low-Income Housing Coalition. I also thank my Senate colleague and my own senator, Senator Casey, who plans to introduce companion legislation today. Chairwoman, I thank you and your staff for your guidance and your support in crafting this legislation. I ask my colleagues to join me in supporting this important bill to simply require either hardwired or tamper-resistant smoke detectors in federally funded supported housing. And I yield back.
Thank you. Is there further discussion of our amendment to the amendment in the nature of a substitute? I now recognize myself for 5 minutes. I want to thank Representative Dean for introducing H.R. 7981, the Public and Federally Assisted Housing Fire Safety Act of 2022, in response to the devastating apartment fire that occurred in a Philadelphia public housing unit where 12 people died, including 9 children. The subsequent investigation into this tragedy found that the majority of the smoke alarms in the home were inoperable, as they had either been removed from the walls or had no batteries inside. With proper fire safety tools in place, these deaths could have been prevented. A 2021 study from the National Fire Protection Agency found that nearly 3 out of 5 home fire deaths are caused by fires in properties with no smoke alarms present or smoke alarms that fail to operate. Functional smoke alarms can reduce the number of home fire deaths. To prevent similar tragedies like the one in Philadelphia from occurring, H.R. 7981 would require the installation of either tamper-resistant or hardwired smoke alarms in federally assisted housing, better assuring families have adequate warning when a fire occurs. Additionally, this bill will help families all across America better understand and properly use the fire safety features in their homes through a national education campaign led by HUD. So I urge all my colleagues to support H.R. 7981, and I yield back the balance of my time. Is there further discussion of or amendment to H.R. 7981? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye. Aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 7981 as amended to be reported favorable to the House. All those in favor say aye. Aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it. Pursuant to notice, the chair now calls up H.R. 6529, the Twin Parks Northwest Fire Safety Act of 2022. The clerk will report the bill.
H.R. 6528, a bill to require owners of covered federally assisted rental dwelling units to install temperature sensors in such units and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America and Congress assembled. Section 1, short title. This act may be cited as the Housing Temperature Safety Act of 2022.
Without objection, the first reading of H.R. 6529 is dispensed with. The gentleman from New York, Mr. Torres, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of the substitute to H.R. 6528 offered by Mr. Torres of New York. Strike all after.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from New York for 5 minutes to explain the bill and his amendment.
Thank you, Madam Speaker. Madam Chair. The inspiration behind the bill was an incident in my district. The South Bronx, a development known as Twin Parks Northwest, was the scene of the deadliest fire in New York City's history in more than 3 decades. The immediate cause of the fire was a malfunctioning space heater. But we have to ask ourselves a deeper question: why is it so common for low-income people in federally funded housing to use space heaters? And the answer is the chronic lack of heat and hot water causes tenants to resort to space heaters out of desperation. Space heaters are often a cry for help and a cry for heat. And so my bill would establish a federal heat sensor program, which would enable state and local housing administrators to monitor heat and hot water levels in real time in apartments in order to hold landlords accountable for providing their tenants with sufficient heat and hot water. When I was a member of the New York City Council, we established a municipal heat sensor program. And among the buildings that installed these heat sensors, we saw a 58% decline in heat and hot water complaints. And so we have an opportunity at the federal level to harness the power of technology to bring housing code enforcement into the 21st century. And I would certainly encourage every one of my colleagues to support the bill. So thank you, Madam Chair.
Is there further discussion of or amendment to the amendment in the nature of a substitute? If not, I recognize myself for 5 minutes. I want to thank Representative Torres for introducing H.R. 6528, the Housing Temperature Safety Act of 2022, in response to the tragic apartment fire that occurred in his district in the Bronx. 17 people died in that fire, including 8 children, and this was entirely preventable and even foreseeable. The Twin Park Northwest apartment building was home to 120 families, including 91 families who were assisted through the Housing Choice Voucher Program. Because of heating and ventilation issues in the building, too often families found themselves shivering in their apartments, forcing them to take matters into their own hands by purchasing space heaters. This reality led to devastating results. To address this issue and better hold housing providers accountable in ensuring apartments are meeting temperature requirements, H.R. 6528 would create a pilot program to install and study the efficacy of temperature sensors in federally assisted housing. As the tragedy in the Bronx proved, inadequate heating and cooling in federally assisted units is a danger to our communities. This bill provides a key step towards researching and improving tools to better ensure assisted families' homes are both safe and warm. So I thank Representative Torres for his leadership on this issue, and I urge my colleagues to support H.R. 6528, and I yield back the balance of my time. Is there further discussion of or amendment to H.R. 6529? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those no, opposed? In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering 6529 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it. The ayes have it, and H.R. 6529 is agreed to.
How are you? Pursuant to notice, the chair now calls up H.R. 68, the Housing Fairness Act of 2020, and the clerk will report the bill.
H.R. 68, a bill to authorize funds to prevent housing discrimination.
Mr. Chairman, I ask that the bill be considered as read.
Without objection, the first reading of H.R. 68 is dispensed with. The gentleman from Texas, Mr. Green, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 68 offered by Mr.
I ask that it be
Green.
considered as read, Mr. Chairman.
Without objection,
I object
there's an objection.
of the ANS's base text.
Do you object to, you want it read at length?
Oh, I'm sorry. I jumped the gun.
Yes, you did.
I did. Thank you, thank you, Mr. Chair.
I'm not a Madam Chair either, so.
Well, thank you for your deep courtesy, and the courtesy shall be returned.
Okay. Without objection, the amendment in the nature of a substitute will be considered as read. And your objection is to it being considered as the base text.
Thank you, Mr. Chair.
The objection is heard. The amendment in the nature of a substitute will not be treated as the base text and will instead be treated as a first-degree amendment. I now recognize the gentleman from Texas for 5 minutes to explain the bill and his amendment.
Thank you, Mr. Chairman. I'd like to extend my condolences to Mr. Caston, and I'm certainly grateful that we have had the return of Chairwoman Waters. Mr. Chair, I would like to thank Chairwoman Waters and all of the members for the opportunity to speak in support of H.R. 68, the Housing Fairness Act of 2022. This bill would reauthorize and expand upon the Fair Housing Initiative Program, known to us as FIP. The Fair Housing Initiative Program provides funding for fair housing organizations to assist persons who may have suffered housing discrimination. The program also promotes fair housing laws and advocates for equal housing opportunities. H.R. 68 will authorize funding for FIP for another 11 years at current and expected funding levels. The bill has broad support, including the National Housing Association, the National Association of Realtors, in tandem with more than 40 national and local civil rights, housing, and consumer advocacy groups. This is one of the occasions when what others are saying can be exceedingly important. I'd like to read excerpts from the National Association of Realtors. More than 50 years after the passage of the Fair Housing Act, the homeownership rates for Black Americans, Hispanics, Asian Americans continues to lag behind that of white Americans. NAR, that would be the National Association of Realtors, is firmly committed to the enforcement of fair housing laws and the policies that address historic and systemic barriers to homeownership. For these reasons, the National Association of Realtors continues to offer its strong support of H.R. 68, the Housing Fairness Act. Also, I have a letter from more than 40 organizations including the National Fair Housing Alliance, Americans for Financial Reform, Center for Responsible Lending, the National Consumer Law Center, the National Urban League, and many others. Just a few excerpts. Researchers at the University of California at Berkeley analyzed nearly 7 million 30-year mortgages and found that Black and Latino borrowers were charged higher interest rates and refi rates when compared to white borrowers in both face-to-face and online transactions, costing them a total of $765 million each year. They go on to say that in 2021, fair housing organizations, primarily funded by FIP, investigated 74% of all reported complaints of housing discrimination across the nation, and this is more than double that of the local, state, and federal government. These organizations play an important role in making sure all Americans have access to fair housing. H.R. 68 will also implement national and regional testing programs to identify and document instances and patterns of discrimination against purchasers and renters of homes. The results of this testing may then be used to pursue investigations and enforcement actions by federal, state, local, or private organizations against those who demonstrated to have committed housing discrimination. These studies will also examine the ways algorithms and artificial intelligence impacts the housing market and availability of housing for persons protected under the Fair Housing Act. Mr. Chairman, I'm pleased to submit H.R. 68 for your consideration, and I thank the staff for the support that it provided in helping us to bring this to fruition. I yield back.
Gentleman yields back. Is there further discussion?
Mr. Chairman, I have an amendment at the desk.
Mr. McHenry has amendment at the desk. We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? Seeing so, clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 68, offered by Mr. McHenry of North Carolina.
Without objection, the amendment, reading of the amendment will be dispensed with.
Move to strike the last word, Mr. Chairman.
Gentleman's recognized for 5 minutes.
Look, I'll start where I ended with my opening statement, which is to the 80% of the American people who say inflation is the most important issue facing the country, we hear you loud and clear. What this amendment does is a very straightforward thing and says this bill cannot be enacted until inflation is back under 2%. This month, the Consumer Price Index came in at 8.6% year over year, the highest since 1981. This was driven mostly by an increase in the price of essentials like food, gas, and shelter. And as low and middle income Americans and those living on fixed incomes spend a greater percentage of their income on these core necessities, the Democrat Party infused and induced inflation is particularly devastating for them. This inflation is due to the bad fiscal policies of a Democrat House, Senate, and White House that have driven us into this inflation that we're experiencing to a greater extent than the rest of the world. In my home...
Mr. McHenry, let me stop you for a second. Apparently, we're having some trouble distributing it electronically. Let's hold on for 1 second.
Sure.
So is it popping up on here? Do you get it? Have you gotten it?
Yeah.
So then she did send it.
She did send it to FSC Docs, but I don't think Katrina has it yet. So it was submitted at 11:14.
All right. Let's come back to order. Mr. McHenry, you can either start
I'll
over
just keep-
or keep going.
I'll just keep rolling, since I was convincing my Democrat colleagues so effectively with the words I'm speaking about, the rising price of food and gas and shelter. So I'll just continue where I was. Thank you, Mr. Chairman. And look, the American people know what's happening here economically. They see the rising prices of everything they're purchasing, essentials like food, gas, and shelter going up dramatically. In the core part of my district, housing costs alone have increased by more than 15% since last year. In the region I live in, local food banks are talking about the challenges, the struggle of keeping up with staples and essentials to help working families that are struggling to keep up with the rising price of groceries. And one of my constituents said on one of the local TV affiliates, quote, "We're tired of higher grocery bills. We're tired of gas prices going up." And I agree. North Carolinians are fed up and they deserve answers, just like the rest of the American people deserve answers. So let me be clear. The surge in consumer prices making everyday life unaffordable for Americans is directly attributable to Democrats' reckless spending and bad economic policies. Even the left-leaning San Francisco Fed, Secretary Yellen's old stomping grounds, agree that the so-called American Rescue Plan, a partisan Democrat-only bill, fueled inflation. But this bill that we're currently debating, along with the others we will be discussing today, will do nothing to bring down costs for working families. My amendment is simple. It says this bill cannot go into effect until we rein in out-of-control inflation, specifically until it's back below the Fed's 2% target, which was the pre-pandemic level of inflation. The American people are tired of progressive wish lists and spending priorities, and especially the ones that we're seeing before the House this year. Instead of using valuable committee time to score some political wins shortly before the midterms, I think Democrats should be focused on the kitchen table issues that have caused President Biden's approval ratings to plummet. Unfortunately, for struggling families, I fear we'll only see continued Democrat disinterest in tackling the big issue of the day, that big issue being inflation and rising prices. And the good news is Republicans have priorities here and have a way to take on this challenge. That is sound money and fiscal discipline, and we are going to bring that to the American government and for the American people, and hopefully return us back to those sound money principles that have made our country strong. That's what this amendment is about. We welcome a debate about inflation, and if my Democrat colleagues would like to engage in a debate about inflation and whodunit, I am more than willing to do that. Finally, Mr. Chairman, I ask unanimous consent to insert into the record the following documents. The Federal Reserve Bank of San Francisco's report entitled, "Is the American Rescue Plan Taking Us Back to the 1960s?" And a February 2022 National Review article entitled, "Biden's Stimulus Made Inflation Worse," and a February 2022 AEI op-ed titled, "Yes, the Biden Stimulus Made Inflation Worse." Those two things kind of go hand in hand. Number 4, a series of 5 op-eds written by former Obama Treasury Secretary Larry Summers warning about inflation. Number 5, a New York Times op-ed by none other than former Obama Treasury official Steve Ratner entitled, "I Warned the Democrats About Inflation." We see the theme here. Number 6, a June 2022 U.S. Wall Street Journal op-ed titled, "Biden Has No Plan to Fight Inflation." And number 7, another Wall Street Journal op-ed titled, "President Costanza Takes on Inflation." Neat title. Number 8.
Gentleman's time is expiring.
I ask unanimous consent to also insert in the record President Biden's plan for fighting inflation. And number 9, a June 2022 Axios article entitled, "Rising Food Prices Are Changing the Way We Eat and Shop." Those are the 9 unanimous consent requests I have, Mr. Chairman, and look forward to.
Gentleman's time has expired. Without objection, those articles will be entered into the record.
Great, thank you.
I move to strike the last word. Vargas from California.
Mr. Vargas, first we're going to go to Mr. Green. if that's okay with you. Mr. Green, you are recognized for 5 minutes to strike the last word.
Thank you. And I do strike the last word, and I appreciate the opportunity to speak on behalf of the 100% of the people who are Black, Latinos, persons of color, who are paying higher interest rates, higher fees when they get loans. This is another way of saying inflated interest rates and inflated fees, costing them $765 million each year. So in addition to the inflation that we're experiencing nationally, they have on top of that $765 million worth of inflation each year. It would seem to me that my colleague would be concerned about that $765 million worth of inflation that they have to experience, and it won't go away without some help from the Fair Housing Initiative program. So let me just yield to my colleague for a moment because he wants a debate. Let's debate this question of $765 million on top of the inflation that's experienced by everybody else in the country. Are these Americans deserving, dear colleague, your support, some assistance from you? Or are they just persons that we forget? They don't count. I yield to you.
Well, Mr.
Gentleman from North Carolina is recognized.
As we debated last week, I would say to my colleague, the same principles persist. And yes, I'm willing to work with my colleague, but this is the first conversation you've had with me about the contents of your bill. If you wish to have a bipartisan outcome, talk to Republicans about it.
I reclaim my time. I'm sorry that this has been a mystery to you. We did debate it on the floor, and it has been noticed, and I would gladly welcome a conversation with you. We've had dinner together. We've developed a relationship over the years. But I do contend that we cannot continue to ignore what's happening to people of color in this country. For many, they're not even considered Americans. When they speak of Americans, they don't consider these folk. These people suffer every day from inflation. The inflation of fees that will cost them more when they get a mortgage, the inflation of interest rates that are higher when they refinance, and this prohibits them from passing on a legacy of help to the next generation, to help the next generation acquire additional wealth. Wealth building is minimized when you have to pay more for your loans than others. So these Americans deserve consideration too. And at some point, we have to decide that aside from the inflation that they are paying here and the inflation that they encounter at the gas station, that we can do this. I don't think we should avoid doing what we can do until we get something else done. This is something that we can do. And the question is, do we have the will to do for these Americans what we would want to do for the rest of America? I yield back.
Gentleman yields back. Gentleman from Texas, Mr. Williams, recognized for 5 minutes.
Thank you, Mr. Chairman. I want to echo the comments we've heard from the ranking member today. Let's go back to 1981. Very few of you in here remember 1981. But I was employing 330 people. I was building a shopping center at 17% interim interest. And we had a president that had given up on America, Democratic president. Inflation, we talk about inflation. Inflation was totally double digits, around 18%. Couple that with 19% interest. French Hill remembers that. And the Federal Reserve, well, they were raising interest rates. I mean, we were paying 18, 19%. If you had a certificate of deposit, if you had any money, you could take it to your bank, and the bank would give you 19% interest on a 2-year CD. Most people didn't have the cash to do that. But principal balances are much higher today. You could buy a Chevrolet pickup from me for $3,500. You could buy a home for about $45,000. Now that same pickup's almost $100,000. That home's $350,000. So, and they're raising interest rates. Principal balances are more. And the supply chain, we didn't have supply chain issues back then. The economy was really hurting, but you had something to sell, for crying out loud. Now we have nothing to sell. We have no cars to sell. We have no nuts and bolts to sell. The supply chain, everybody's being told that it's the way it should be, but we didn't have it. And as a business person, you had the ability to sell something and claw your way out of the mess, but we don't have that today. So national debt was out of control. It's no program, just like then, there's no program to fix it now, and there's just a lot of uncertainty in this economy. It reminds me of 1981. And the bottom line is you got to fix it by helping Main Street. You got to cut taxes. You got to reduce regulations. You got to let the private sector compete and get us out of this mess and let us take more risk. So I recently set out a survey in my district the other day about inflation and what it's having on everyday lives of people in my district, and the responses were pretty heartbreaking. I wanted to read one of the stories I received. It goes like this. I'm losing staff because they cannot afford to drive to work. We are going from a middle-income family to lower-income family. I'm not sure how we'll afford our food, medications, and our mortgage at this rate. My 401k is worth almost absolutely nothing. Now, this story is all too common in our country right now. We must get our financial house in order and start dealing with the real issues that are affecting the American people, and that's inflation, that's interest rates, that's cost of living, and we need to, and instead of some of the things we're talking about, and we also, all this might happen too if we do something about the border. So 1981 all over again. If you weren't here in 1981, welcome to 1981. Hopefully we have a fix. And with that in mind, I yield my time back, Mr. Chairman.
Gentleman yields his time back. I'd remind my friend that during the 1980s under Ronald Reagan, pretty much every bank in Texas went broke. Half the companies went broke. But gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. I do challenge the premise of inflation is only happening in America. I know that my good friends on the other side just like to blame the Biden administration. Well, let's take a look at what Statistica says, and let's take a look at some of the averages of inflation in Europe. Obviously, Europe, industrialized countries just like us. I'm going to read from Statistica. As of May 2022, the inflation rate in the European Union was 8.8%. 8.8%. Now, they didn't have the American Rescue Plan. Hard to blame Biden on 8.8%. So then it goes on and says, with prices rising fastest in Estonia, which had an inflation rate of 20.1%. By contrast, the inflation rate in Malta was 5.8%, which was the lowest in the EU during this month. And what month is it? It's the previous month that we were in. So this whole notion that it's only in America that we have inflation is BS, and everybody knows it, but my good friends on the other side use it as a political whip, especially when you have a good bill like this that we should pass. The reality is that inflation is happening all across the world because of the pandemic. In fact, let's take a look at Europe. Estonia, as I said, 20.1%. Lithuania, 18.5% inflation. Latvia, 16.8%. Czech Republic, 15.2%. Bulgaria, 13.4%. Poland, 12.8%. Romania, 12.4%. Slovakia, 11.8%. Hungary, 10.8%. Croatia, 10.7%. And it goes on. The reality is that inflation is happening everywhere, not just in America. In Latin America, one of my daughters happens to be in Ecuador on a mission right now. She can't even get to her assignment because they've closed down the roads because people are complaining and protesting about inflation and the price of gasoline. So this whole notion that it's only happened in America is not true. We have to work together to bring inflation down, but this whole notion that somehow magically it only happened in the United States and it's all Biden's fault is BS, and everybody knows it, and we ought to say it. Thank you. And with that, I yield back.
Gentleman yields back. The chair will recognize the gentleman from Wisconsin, Mr. Stile, for 5 minutes.
Thank you very much, Mr. Chairman. I thank my colleague from Texas for bringing us back to 1981. It was a great year I was born. I don't know if that actually makes it a great year, but it was the year I was born.
We'll
let's-
move to strike the last word.
So let's dive in. We're talking about inflation. People are getting clobbered. And my colleague says that people are saying that inflation is only in America. That's not true. Inflation's running rampant in America. We heard a list of countries where it's also running rampant. I'd note that many of the countries that were just listed are bordering a land war in Europe. Bordering a land war in Europe. So of course there's going to be massive inflation in those countries as well. But let me tell you, the fact that there's inflation in other countries doesn't remove the fact that policies in the United States of America are making inflation worse. And the fact that other people are suffering from inflation across the world doesn't make it less painful to the people here in America. And there are policy choices we could be making in the United States of America to ease the burden that people are feeling every day. Just the other day, I was in South Milwaukee filling up my car with gas, and a woman pulled up next to me. I started chatting with her, and I said, "What does it cost to fill up your car?" And she looked at me and she said, "You know, sir, I don't know. I don't know because I only got $40, and $40 doesn't fill up my tank." So the fact that other people are suffering around the globe, in Estonia and Latvia, and I understand that they're suffering. I'm not removing the fact of that. But I represent the people in the state of Wisconsin. I represent the people here in the United States of America. And we have an opportunity in the United States of America to turn the course on policies to ease the burden on people that are suffering. And my Democratic colleagues continue to put forward bills before us that add to the spending problem that we're having here in the United States of America. They want to add $5 gas fuel to the fire. It's absolutely nuts. We have the opportunity to unleash American energy and lower the burden that Americans are facing when they're paying for their heating bills in the winter and their air conditioning bills in the summer. We have the ability to change policies here in the United States of America to ease the burden of that woman in South Milwaukee who only has $40 to fill up her car. We have the opportunity to turn the corner on runaway spending and get spending under control. But instead, we continue to hear policies from the left that want to limit the supply of energy, to drive up their costs, to have some transformational change. Tell that to the woman in South Milwaukee who has $40 to fill up her car with gas. She's getting punched in the face by the policies of this administration. At the beginning of the Biden administration, we saw $1.9 trillion of spending, adding fuel to the fire of inflation. And if you look at the chart of when inflation took off, it almost correlates exactly with the start of the Biden administration. Sure, it ticks up a little bit when Putin invades Ukraine. But that's way down the road after this fire had already started by my colleagues from the left. And we're here today debating bills that add spending, add fuel to the fire. Our ranking member inserted a whole host of articles into the record. But you don't even have to read them all. All you got to go do is speak with the American people. They're darn frustrated. They're sick and tired of the spending. They're sick and tired of the energy policies coming out of this administration. Now is the time to change course because people are getting pummeled. And I'll tell you, it's not a lot of solace to people in southeast Wisconsin that people are also getting pummeled in other countries around the world. It's time that we begin to change course on our policies here in the United States of America so people who are getting clobbered, who are getting punched in the face by these higher prices, who are getting clobbered, have an opportunity to be able to afford the things that they need to support their family. I hope we begin the process of sobering up to the reality that Democratic policies have a real impact on the people in America. Adding fuel to the fire by more spending is not the path. Mr. Chairman, I'll yield back.
The gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes to strike the last word.
Madam Chair, thank you. I move to strike the last word and to ensure a balanced debate on this issue. I yield the remaining time to Representative Green from Texas.
I thank the gentleman for yielding. I have a question for my colleague. Dear colleague, dear brother, dear friend, are there any black people in Wisconsin?
You better
You
believe
said you
it.
support the people of Wisconsin. You're here to support them. Any brown people in Wisconsin? Because if there are black and brown people in Wisconsin, then my guess is they would want you to help them with this $765 million that's being paid each year in inflated refi fees, inflated interest rates. They probably need that help. There's nothing that you have said today that prevents you from supporting the black and brown people in Wisconsin who are being discriminated against.
Will the gentleman yield?
Not just yet, but perhaps at a later moment. You talked about easing the burden. Do you want to ease the burden on some people or all people? And this goes to all of you over there, all of you. Do you want to ease the burden only on certain people? Does it matter to you that this invidious discrimination continues? You would rather talk about the prices at the gas tank so as not to have to talk about the fact that when you had the House, the Senate, and the presidency, these problems with inflated interest rates were still there, and you did nothing about it. So today I offer you an opportunity to do something. But what do? You talk about what's happening at the, and I, by the way, I support doing all that we can to eliminate this inflation at the gas tank when you're filling up your car. But friends, at some point, you've got to realize that there are black people and brown people in your districts who need help. And you have the opportunity to help them, and you're passing it up simply because you want to score political points. That's what you're doing. You're not addressing this issue. You're discussing issues unrelated so that you can score political points with your constituents. And let me add this. You say that the American people want this. Black people are American people too. Latinos are American people too. So when will you confront the fact that you have people in your congressional districts that may not look like you, but who are American people? When will you confront it? I'm going to call it to your attention today, and you can take the rest of your lives to contemplate how you'll deal with it. I yield back.
The time belongs to the gentleman from Illinois.
Madam Chair, I yield back.
Thank you. The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes to strike the last word.
Well, thank you, Madam Chair, and it's good to see you. I hope you're feeling well. Sorry you've gone back through the COVID machine, and I want to share condolences from all of us over our friend Sean Caston and their family loss. Our hearts are broken for them, and pray for comfort for the Caston family. I want to address some comments made by my great friend from Southern California, Mr. Vargas, on his subject that somehow we're suggesting on this side of the aisle as Republicans that this inflation is unique to the U.S. in some way. I don't know that we've made that argument. It's higher here, with the exception of Great Britain, which has made some very bad decisions on their energy decisions, and this is a country that could have been energy independent as well, I might add. So inflation is higher in the UK than it is here. But to compare us to Estonia is not a good argument. I urge my friend from California to rethink his laundry list there. That's like saying that the EV participation in Oslo is somehow comparable to 330 million America's car ownership and suggestions, and of course that's nonsense. So let me suggest that you listen to prominent, successful, well-recognized, accolade Democratic economists, Steve Ratner, Jason Furman, former Treasury Secretary Larry Summers, who also served as the National Economic Advisor on the President Obama's White House staff, when they warned this administration not to put gas on the fire following the CARES Act bipartisan spending in this country and the bipartisan appropriations at the end of 2020. Far too many dollars chasing too few goods. You will run the risk of igniting inflation, warned Larry Summers in January and February of 2021, urging the president not to take this step. Let me tell you why, and why inflation is worse here. When you look at the output gap, in other words, the fall off in business in America of about 9%, Larry Kudlow and the Trump administration projected a V-shaped recovery, that we would regain our employment very promptly because of the nature of the COVID-19 decline and the amazing bipartisan actions of this Congress to work with the Fed to get the economy back moving again. We did that. The stimulus proposed in the CARES Act, American Rescue, infrastructure, unfunded, not paid for, the appropriations bills, all that was, and if you include the Fed leverage programs, something like 27% of output. 3 times the gap. So we know there's too much money we put in the economy, both by our bipartisan work in 2020, and that was absolutely wrong to triple and double down in 2021. How do we know that today? Because every night there's a $1.9 trillion, trillion with a T, overnight repurchase agreement where it's clear the economy cannot absorb any more money. And that has fueled this inflation, which is why it's not transitory, to quote our president. It has not peaked, to quote our president. It is stubborn. And that's why this committee and those of us on the Republican side of the aisle are so dedicated to commenting on inflation and the mistakes that some of which we made in a bipartisan way by putting in too much money, but we didn't know. I mean, we all acknowledge that in March and April of 2020, we didn't know what the impact of COVID-19 was. But we sure knew it by the summer of 2020 and the fall of 2020 when we began urging, let's claw back some of this money, let's better target it, let's let the Fed begin to stop its eased monetary policy. But President Biden did not listen, and that's why we found ourselves here with stubborn inflation that could get embedded in the economy. It's a concern to our families because black, brown, or white, they're suffering. $5,000 a year in spending in Arkansas is a lot of money when the median income is $46,000. $5,000 more in inflated spending is a lot of money for our families in Arkansas. And many people drive an hour to work for a good job in my state. And they're hurt by these high gas prices. They're hurt by the grocery store. And that's why Republicans are focused on all of our families who are hurting from the Biden inflation. I yield back to the chair.
Move to strike the last word.
The further discussion
Move to strike the last word.
on the amendment? The gentleman from Ohio is recognized for 5 minutes to strike the last word.
Thank you, and I yield my time to Mr. Stile.
Thank you to my colleague from Ohio. I'll note 2 things to my friend across the aisle. One, the woman who I met in South Milwaukee was a person of color. I didn't add it to the start of the story because I didn't think it was as relevant as the fact that she, like all Americans, are suffering from higher prices. I would also note to my friend across the aisle that prior to the pandemic, under the policies of the Trump administration, we saw real wages increasing across the board. We saw real wages increasing, I believe it's 6.8% the year before the pandemic, and it was higher than average for Hispanics, for blacks, for women, for veterans. Under this administration, real wages are falling. Real median weekly wages are falling at 3.9%. And it's worse for African Americans. African Americans are falling at 4.6%. So under the policies prior to the pandemic, under the Trump administration, real wages were increasing, the standard of living was increasing for all Americans, and in particular, the least amongst us, those who are in the most challenged communities, in particular, Hispanics and blacks, as my colleague would like to be notified of. And following the pandemic, under one-party Democratic control, as prices are rising faster than wages, where everyone in America is falling behind at a rate of 3.9%, I would note one-party Democratic control has uniquely hurt black Americans. And so if we want to have the discussion on the merits of who's getting clobbered by the policies of this administration, by the policies of one-party Democratic control, happy to have that conversation. Because prior to the pandemic, under Republican policies, people were moving up. And people were moving up the most who were least amongst us. Rightfully so, because they had the farthest to go up. There's plenty of people who are challenged in southeast Wisconsin, in Racine, Wisconsin, or Kenosha, or Janesville, that's my hometown. You better believe it. And we had policies that actually address it to help the least amongst us. And on the other side of this, under one-party Democratic control, we have policies that's clobbering everybody. But you know who it's really hurting? It's really hurting low-income workers. And in my district in southeast Wisconsin, it's disproportionately impacting people of color. You better believe it's darn frustrating to see that happen after we saw policies that were helping everyone, including the least amongst us. And so for anybody to walk away believing this side of the aisle isn't fighting for the least amongst us is an absolutely disingenuous argument, Mr. Chair, because this side of the aisle is putting forward policies that don't just in theory help the least amongst us, they help the least amongst us in practice. The data shows it. Prior to the pandemic, real wages increasing at nearly historic rates, and across the board, and uniquely, and most importantly, it was helping people who fall in some of the most challenged demographic groups in this country. Above the median real wage increase, I will remind you, prior to the pandemic, under the Trump administration, were blacks, Hispanics, whites, Asians, veterans, rightfully so, because they had the farthest to come up. We recognize that there's real challenges in this community. We realize there's real challenges in the United States of America. And how do we do it? We grow the economy, we provide opportunity for people, and under one-party Democratic control, as people are getting punched in the face by higher prices, as real wages are coming down, people are falling further behind, you better believe that there's people of color that are even getting hurt harder than average. Well, I suggest we change policies, and we go back to the policies of the Trump administration when people were improving their standard of living, and those who are the least amongst us who find themselves in the most challenged communities in Wisconsin and across the country, that we return to policies that were empirically successful at moving people up. And anybody viewing this, that people are trying to hurt the least amongst us, that is a garbage argument that I will be more than happy to debate anytime, anywhere. I yield back to my colleague from Ohio.
Yield back.
Is there further discussion?
Madam Chair.
If not, I'd like to
no.
recognize. Is there, Mr. Perlmutter, you're
Thank you.
recognized for 5 minutes.
Thank you. Just a couple things, and I'm going to yield to Mr. Green. I just remind my friend from Wisconsin, there are 9 million more jobs today than there were under Donald Trump when he left office. And we know, let's talk about lumber, which you were complaining about a year ago this time about inflation, and it was way up. It's crashed, okay? Oil is down $30 a barrel in the last 2 weeks. This is peaking. We'll get it under control. And, you know, we've had exports are up. So I think all of us would agree we don't want to see inflation, but we went through a pandemic and we've had shortages. So you could go get a Peloton today at half the price you would have paid a year ago, Mr. Stile. And I will.
You can't eat a Peloton.
You can't eat a Peloton. That's not relevant.
The
I'm just
floor
telling-
belongs to the
Well, you
gentleman
can
from
get- you can
Colorado.
get- I would say to the gentleman from North Carolina and to my friend from Wisconsin, at the beginning of the pandemic, you couldn't get toilet paper. You couldn't get hand sanitizer. You can go get it for nothing today. That's the nature of a pandemic and the effect that it had across supply chains and supply of all kinds. Now, the real question here is Mr. Green is trying to address the fees and the different kinds of penalties imposed upon people, and he's got a bill that takes care of that today. And what is being asked of under Mr. McHenry's amendment is that be delayed. There's no reason to delay that. So I'm going to yield to my friend from Texas, Mr. Green.
Thank the gentleman for yielding. And I would add that in the best of times, the very best of times, people of color are still paying $765 million in inflated fees and inflated interest rates. So all of that argument that you just made would only support the argument that I'm making, which is people of color have an added burden that they shouldn't have to bear. And they wouldn't have to bear it if my friends across the aisle would decide that they'll do something for people who have been discriminated against since 1619 in this country. If you tolerate it, you perpetuate it. And you tolerate this kind of behavior. What you're doing today is indicative of your willingness to tolerate invidious discrimination. Because that woman, that lady that you saw at the gas station, a person of color, yes, all of the things that you have said may apply to her, but you don't address the additional thing that applies to her. How she has to pay more for a loan if she gets one. How she may not get housing if she applies for it and another person of a different hue can come along right behind her and get that housing. You won't address that. You'd rather see a rising tide raise all boats when some people don't have boats. You want people to pull themselves up by bootstraps that they don't have. At some point, you've got to address invidious discrimination. That's what this legislation does. It gives you an opportunity to do something about the challenges that you said exist. You acknowledge the challenges, but you don't acknowledge the means by which they can be dealt with. This legislation does it. You have the opportunity. The question is, will you take advantage of it? I yield back to the gentleman.
I yield back to the chair.
The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word. Interesting debate. Very concerned about some of the things that are said, some of the misstatements that are made. The sponsor of the bill is concerned about fees. It's about time. I've had bill after bill, amendment after amendment in this committee to address low and moderate income folks and keep the costs of doing business, the cost of access to capital at a minimum, and never even get a hearing. If they are, they're defeated and put down. I work for for the group that you're working for this morning. I work for them every day and get nothing out of this committee to be able to be helpful. I'm very disappointed.
Last time I checked, they were American people.
Number two, you're talking about inflation. Inflation is an insidious thing that hurts the low and moderate income folks the most. I agree with you on that. But where's the administration on this? They're the ones who are keeping us high. And let me give you an example how this works. I had, in my small business committee, brought an economist in, and I asked him the question. In my mind, inflation is four separate things: money supply, rules and regulations, energy, and workplace, supply chain, work, job stuff. And he said, that's exactly right. I said, would you quantify each one of those? And he said, money supply is about 40%, the other three is about 20%. 2 weeks later, we had in this committee, sitting at that table over there, another economist. I asked the same question of that economist. I said, are those four things basically popping up inflation? He said, yes, that's it. I said, percentage-wise, is that roughly? He said, yeah, just for a little bit, but it's probably in the neighborhood. If you stop and break down each one of those, what about it? Money supply, where's it come from? About half of it comes from all these excessive bills that my good friend from Wisconsin was talking about a minute ago, and the Fed throwing in their QE3 stuff for probably a year longer than it needed to. All this money, definition of inflation is too much money chasing too few jobs and services. And so that's where you start with 40%. Who's in charge of that? Who's passing these bills? Not people on our side. Number two, energy. The day that Joe Biden got elected, I filled my car up. It was $1.89 in my local quick shop. On Monday, I filled up my car. You know what it was? It was $4.89. Within a year and a half, he's got it $3 higher than what it was the day he took office. And that's not due to Ukraine. Give me a break. That's due to his energy policies. And in the meantime, he's endangering us with depleting our oil reserve. This is stupid, is what it is. This is selling out to the far left and energy and the green energy folks at the expense of all of our people in this country, all of our small businesses in this country. Third thing, rules and regulations. You're talking about fees. Guess how much the fees were last year under the Biden administration for cost compliance? $201 billion in 1 year. That's the figures from their own government agencies. $201 billion. You talk about a driver of inflation? That's a driver of inflation. Under Biden, under the Obama administration, it was about $100 billion a year. Under Trump administration, you know what it was? Almost zero. Why? Because it said for every rule you put on the books, you got to take 2 off. And in fact, he wound up, according to one of the local newspapers here in town, it was 8-1. He also capped some of the spending on agencies. It can be done. But it's a driver of inflation. Workplace problems, employee problems, supply chain problems, we're not done with that yet because we incentivize people to stay home instead of go to work. And now you've got a disruption in supply chain, and that drives up inflation. So who's in charge of each one of these? Who makes these rules and regulations? Your administration. Who's the one that's got the energy policy in charge of it? Joe Biden, the day after he took office, said no to the Keystone Pipeline and then decided to curtail drilling on federal land. He can change that tomorrow. And rules and supply chain problems, stop incentivizing people to not work. Let them go to work instead of staying home. The administration's in charge of all of that. So when you come here, we have ideas, we're shut out of the process. Also, the gentleman from Colorado keeps talking about all the jobs that created this administration. That's baloney. You know what? If you go back and actually look at the numbers, we're still 800,000 jobs short of where we were prior to the pandemic. This administration is sluggish in being able to get the country back up and running because of the problems that they have with inflation, rules and regulations, and energy. If they get out of the way, let our entrepreneurs and small businesses drive the economy, we'll be back to where we were prior to the pandemic and have hundreds of thousands, not millions, of more jobs. We're still short 800,000 jobs, not 900,000 to the good. With that, I yield back, Madam Chair.
Gentleman yields back. Is there further discussion?
Madam Chair.
Who seeks recognition? Okay. The gentleman from South Carolina, Mr. Norman, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. You know, as I sit here, first meeting I've had, you know, I hear about all these concerns. We've got a group of farmers coming in who, guess what? Who can't get fertilizer. Why? Why can't they get fertilizer? And bear in mind, if you can't get fertilizer, you can't grow the crops to provide the food for the very people that you say you're concerned about. Where are the hearings on that? As Mr. Lukemeyer just mentioned, the price that is taken to get the fertilizer to the stores has risen 107% with fuel oil. Motor fuel, 49%, airline fees, 38%, gas utilities, 30%, chicken, 17%. My cousin called, you're talking about a concern, he can't get corn to feed the poults to provide the chickens to put in the stores. You know, where are the hearings on this? Where's the concern with it? Where's the concern about the massive numbers coming in this country that this administration is totally responsible for? Where's the concern about the 50 on the terrorist watch list, which in the prior administration was minimal, 0 to 15%. It's now 50%. The police have to be right 100% of the time. The terrorists have to be right one time. Where's your concern about the shootings all over this country? We just had a police officer shot in the face, ambushed in Spartanburg, South Carolina, last night. Where's your concern? You talk about housing, can't afford housing. The last time I checked, there's no solar panel trucks. There's no battery-operated airplanes. There's no way to get the product to the market at a reasonable price, housing included. So I find it's interesting to hear all this language and all these words when really you're not addressing the problems. You know it. This administration is totally responsible for what is happening to the total destruction of the fabric of this country. And I resent it, and I think it's time that Americans now also resent it, and they're standing up. But, you know, put your concern to where it should be, and to blame everybody else, I resent, because it's we've got a tragedy going on in this country. Inflation, look what it's doing to the very people that you say you represent. I yield back.
The gentleman yields back. Is there further discussion? If not, I will recognize myself for 5 minutes. Ladies and gentlemen, we just celebrated Juneteenth. Juneteenth is simply the fact that in 1863, the Emancipation Proclamation was signed, and word didn't get to Galveston until 1865. And so, as we celebrated the Emancipation Proclamation, we could not help but take into account where we are today, what battles we're still fighting, and how we have been unable to convince those who are elected by the people to be representative of all of the people. Let me just segue for a minute on inflation. I warned my staff that whatever issue we bring up today, there was going to be an effort by the opposite side of the aisle to basically overtake the discussion by talking about inflation and accusing this administration and Biden. Now, before I relate to the ridiculousness of that, let me tell you something about inflation. Unfortunately, people of color have been fighting inflation historically. We fight inflation every day before it becomes a concern of some of you on the opposite side of the aisle. In our community, and it is documented, when Blacks and Latinos apply for mortgages, too often they have too higher interest rate. They are overcharged on the value of the property, and they're first to be foreclosed on. And so we fight inflation in attempting to have home ownership. We fight inflation in attempting to borrow money. Every ripoff artist on payday loans sets down in the poor communities, the Black communities, the brown communities. And they walk away with 300 and 400% interest rates. Oh, we fight inflation every day. Whether we're talking about payday loans, or whether we're talking about the banks, or we're talking about supermarkets with inflated prices. We know what inflation is all about. We fight it, and we try to do everything that we can to keep those who have the responsibility for public policy making to simply see inflation as somebody else's problem, in this case, the administration. I want to tell you that every day that I have been in the House of Representatives, I have witnessed the opposite side of the aisle supporting the biggest ripoff operations that you could ever identify. Whether we're talking about, again, the banks or the payday loan, or we're talking about the rent-to-own, or we're talking about the increasing efforts by those who were involved in predatory lending to continue to support the issue of predatory lending, on and on and on. And so we know about inflation. We know who instigated inflation against people of color. We know that we have suffered from it, and we don't take any arguments from the opposite side of the aisle about how it has been fixed, this economy, by Trump. That is a joke. Absolutely. As I watch television and I watch the treatment of blacks in the committee hearings that are going on about January 5, and the way that black people were treated, their homes were invaded, grandmothers were accused of being fraudulent and accused of being drug dealers, on and on again. And so today we're talking about housing discrimination, but discrimination is a fact continuously in this country by those who claim that they are responsible for doing better by the economy for those of us who are people of color. That is a ridiculous argument. And so my time is up, and I will yield back the balance of my time. Objection. The amendment will be considered as read. I beg your pardon. I'm sorry. Is there further debate on the amendment? If not, the question occurs on the amendment by Mr. McHenry to the amendment by Mr. Green. All those in favor of the amendment say aye. Aye. Those opposed, no. No. In the opinion of the chair, the noes have it.
Can I ask for a recorded vote?
A recorded vote has been requested. All in favor of a recorded vote should raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there are no further amendments without objection, the previous question is ordered on H.R. 68, and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls on H.R. 4495, the Down Payment Toward Equity Act of 2021. The clerk will report the bill.
H.R. 4495, a bill to provide down payment assistance to first-generation home buyers to address multi-generational inequities.
Without objection, the first reading of H.R. 4495 is dispensed with. I have an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of substitute to H.R. 4495, offered by Ms. Waters of California.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment.
Madam Chair, I object to the ANS being considered as base text.
The objection is heard. The amendment in the nature of a substitute will not be treated as base text and will instead be treated as a first-degree amendment. Okay, are we going to this? Without objection, the amendment in the... This. Start here. I now recognize myself for 5 minutes to explain my bill and my amendment. Homeownership is a primary source of family wealth in the United States, and family wealth is a major driver of intergenerational economic mobility and prosperity. However, too many people have not had an equal opportunity to make their dream of home ownership a reality due to historically discriminatory policies and practice. This has created a reinforcing cycle where intergenerational wealth gives certain individuals a head start in accessing home ownership and leaves behind lower income, low wealth home buyers, including many millennials and a disproportionate share of people of color who are then stunted in their ability to build wealth for their children. My bill, the Downpayment Toward Equity Act, will disrupt this inequitable cycle to provide down payment assistance to first-generation home buyers who lack access to the bank of mom and dad. Specifically, my bill would provide $100 billion for down payment assistance and other upfront costs to help home buyers who are the first in their family to purchase a home or purchasing a home after their parents lost theirs to foreclosure, and anyone who is ever in foster care. This bill comes at a time when the current shortage of affordable homes continues to delay the dream of home ownership for millions. During the pandemic, we've watched as investors have scooped up starter homes, paying all cash as everyday people are forced to watch their dreams of home ownership slip away. This is why House Democrats passed the Build Back Better Act last November, which included the housing title I authored to provide over $150 billion in fair and affordable housing investments to target supply-side constraints and create over 1.3 million homes. Since the foreclosure crisis of 2008, we've been moving toward becoming a nation of renters, where the American dream of home ownership is only attainable for the wealthy, and the pandemic has only made it worse. This $100 billion investment will be a major step to bringing the dream of home ownership within reach for millions of mortgage-ready home buyers and began to close the unacceptable racial wealth gap. This investment will do this by ensuring those who have been shut out for far too long are finally able to get their foot in the door. So I urge my colleagues to support my bill, and I yield back the balance of my time. Is there further discussion of or amendment to the amendment in the nature of a substitute?
Madam Chairwoman.
The gentlewoman from Massachusetts, Ms. Pressley, is recognized for 5 minutes to strike the last word. The next.
Madam Chair, I move to strike the last word. I am proud to support your bill, which will help address the legacy of discrimination in our housing markets and close the racial wealth and homeownership gaps by providing critical funding toward down payment and other financial assistance for first-generation homebuyers in purchasing their new home. Black and brown families have historically been denied the opportunity to own homes and to build wealth due to intentional policy violence, such as redlining and Jim Crow. We must be as intentional in rooting out these disparities and asserting economic justice. Thank you, Chairwoman Waters, for your leadership, and to our colleagues for your partnership. I urge the remainder of my colleagues to support this bill, and I yield back.
Gentlewoman yields back. For what purpose does the gentlewoman from Missouri seek recognition?
Madam Chairwoman, I move to strike the last word, and I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically.
Madam Chairwoman, has the amendment been properly distributed? No? 8 minutes?
Copies of the amendment have been distributed electronically. I reserve a point of order on this amendment. Have all members received the amendment? If so, the clerk will report the amendment.
Amendment to the amendment in the nature of substitute to H.R. 4495, offered by Mrs. Wagner of Missouri.
I
Add
ask
at the-
unanimous consent that the amendment be
Without objection, the amendment will be considered as read. The gentlewoman is recognized for 5 minutes to explain her amendment.
I thank you, Madam Chairwoman. I'm offering this amendment today to bring attention to the real issues that my constituents are facing in the hopes that this committee and Congress will take the actions needed to address commodities such as baby formula shortages and inflation and supply chain issues to that effect. Over the last 10 months, Americans have seen increased shortages of baby formula along with other commodities. Shortages with the most popular infant formula brands started to occur in the middle of 2021, 10 months ago. Furthermore, in February, the shortage was further exacerbated after Abbott voluntarily recalled some of its products and closed a plant in Sturgis, Michigan. Democrats and the presidents have no answers, despite seeing all the signs. The Biden administration continues to come up with excuses for the infant formula shortage, but has offered a slow and inadequate response. In my district, the 2nd Congressional District of Missouri, the out-of-stock rate for formula reached 82% at the end of May and continues to be one of the top 10 regions in the United States where baby formula remains nearly impossible to find. The St. Louis Crisis Nursery, an amazing organization dedicated to supporting at-risk children and infants, has been pleading for donations of formula so they don't have to turn away any families in need. This is absolutely unconscionable. As a mother of 3 and a grandmother, it is terrifying to think of the desperation parents in my district are feeling when they cannot provide this basic necessity for their children. I've heard stories of moms bartering for baby formula on Facebook, and pregnant women are asking if they should start stockpiling. Constituents in my district who are new parents have shared the lengths they must go just to feed their infants, many of them spending hours each week traveling to multiple stores just to find empty shelves. That should never happen, and it is purely due to the blatant incompetence in the White House. Republicans understand the urgent need for parents and babies to get more formula on the shelves. This committee should be considering legislation that addresses the economic crises that Americans are experiencing right now. Baby formula, record high inflation, and soaring gas prices. Yet here we are, debating a set of bills that will do nothing for American families in need. My amendment would make this legislation's effective date contingent upon the date in which the HUD Secretary determines that the supply chain problems in the United States have been resolved and that there is sufficient stock of baby formula available for American families. I urge my colleagues to support this amendment, and I yield back the balance of my time.
I make a point of order that under Clause 7 of Rule 16 of the House of Representatives, the amendment is not germane because it contains a condition that is unrelated to HUD, home ownership, and down payment assistance. Does any member wish to be heard on the point of order?
Yeah, Madam Chairman, I oppose this point of order. This amendment seeks to only delay the effective date until HUD makes a decision on the supply chain problems, on commodities such as the availability of baby formula.
Is there any further discussion on the point of order? The chair is prepared to rule on the point of order. I've made a point of order that the amendment proposed to this section is not germane. Clause 7 of Rule 16, the germaneness rule, provides that no unrelated condition shall be admitted under color of amendment. One of the central tenets of germaneness is that amendments may not contain unrelated conditions. Here, the amendment in a pertinent part contains the following condition: that HUD must make a determination that the supply chain issues in the U.S. have been resolved and notifies Congress of such determination. This condition is unrelated to the underlying bill. Therefore, the point of order is sustained.
Madam Chair, I would like to appeal the ruling of the chair.
A motion has been made to appeal the ruling of the chair. I move to table the appeal. The question is on the motion to table the appeal of the chair's ruling. All those in favor say aye. All those opposed say no.
No.
In the opinion of the chair, the ayes have it.
I ask for a recorded vote, Madam Chair.
A recorded vote has been requested.
In real time.
Those in favor of a recorded vote should raise their hands and be counted. Oh, a sufficient number having raised their hands, a recorded vote is ordered. The clerk will call the roll.
Mrs. Maloney. Ms. Velasquez. Mr. Sherman. Mr. Meeks. Mr. Scott. Mr. Green.
Yay.
Mr. Green votes aye. Mr. Cleaver. Mr. Palmer. Mr. Palmer votes aye. Mr. Himes. Mr. Foster. Mrs. Beatty. Mr. Vargas. Mr. Gottheimer. Mr. Gonzalez of Texas. Mr. Lawson.
Aye.
Mr. Lawson votes aye.
Gonzalez of Texas said no.
Mr. Gonzalez votes no. Mr. San Nicolas. Miss Axney. Mr. Caston. Miss Pressley. Miss Pressley votes aye. Mr. Torres. Mr. Lynch. Miss Adams. Miss Tlaib. Miss Dean.
Dean votes aye.
Miss Dean votes aye. Miss Ocasio-Cortez. Mr. Garcia of Illinois.
Garcia votes aye.
Mr. Garcia votes aye. Miss Garcia of Texas.
Garcia of Texas votes aye.
Miss Garcia votes aye. Miss Williams of Georgia.
Williams of Georgia votes aye.
Miss Williams votes aye. Mr. Auchincloss. Mr. McHenry. Mrs. Wagner.
Wagner votes no.
Mrs. Wagner votes no. Mr. Lucas. Mr. Sessions.
Sessions, no.
Mr. Sessions votes no. Mr. Posey. Mr. Lukenmeyer. Mr. Lukenmeyer votes no. Mr. Huizinga. Mr. Barr. Mr. Barr votes no. Mr. Williams of Texas. Mr. Williams votes no. Mr. Hill. Mr. Hill votes no. Mr. Emmer. Mr. Zeldin. Mr. Loudermilk. Mr. Mooney. Mr. Davidson. Mr. Budd. Mr. Hollingsworth. Mr. Gonzalez of Ohio. Mr. Gonzalez votes no.
No.
Mr. Rose.
So I'm not getting the sound.
Rose votes no.
Ms. Rose votes no. Mr. Stile.
So, yes.
Mr. Gooden. Mr. Timmons.
Timmons votes no.
Mr. Timmons votes no. Mr. Taylor. Mr. Norman. And now I will now go over the members that were missed in the previous order, starting with Mrs. Maloney. Mrs. Maloney
So you have
votes
to try to get it, 'cause this
Ms. Velasquez.
Velasquez votes aye.
Ms. Velasquez votes aye. Mr. Sherman. Mr. Meeks.
Meeks votes aye.
Mr. Meeks votes aye. Mr. Scott.
Mr. Scott votes aye. Wanting to go to.
Mr. Scott.
Mr. Scott votes aye.
Mr. Scott votes aye. Mr. Cleaver. Mr. Himes. Mr. Foster.
Foster votes aye.
Mr. Foster votes aye. Mrs. Beatty. Mr. Vargas.
Oh, it came up there, they just connected.
Mr. Gottheimer. Mr. San Nicholas. Miss Axie.
Yes, Axie votes yes.
Miss Axie votes aye. Mr. Caston. Mr. Torres.
Torres votes aye.
Mr. Torres votes aye. Mr. Lynch. Miss Adams. Miss Adams.
aye.
Miss Adams, you are not on camera.
I see. So what's up with this?
Miss Adams, we can hear you. We just cannot see you. Miss Talib.
Talib votes aye.
Miss Talib votes aye. Miss Ocasio-Cortez.
I didn't see it. Can I see it?
Mr. Auchincloss.
Auchincloss, aye.
Yep, I'm coming for dinner to try this beef tip thing.
Auchincloss, aye.
Mr. Auchincloss votes aye.
Madam Chair, this is Chairman. How am I recorded? Madam Chair,
Mr.
this is
Sherman,
Sherman. How am I recorded?
how's Mr. Sherman?
Mr. Sherman,
Recorded.
you are not recorded.
Please record me as an aye. Sherman as an aye.
Madam Chair, how's
Madam Chair, this is Congresswoman Beatty. How am I recorded? I wasn't called on.
I beg your pardon, Ms. Beatty wishes to know how she's recorded.
Mrs. Beatty, you are not recorded.
Please let the record show I vote aye.
Mrs. Beatty.
Madam Chair, this is
Mrs. Beatty.
this is
votes aye.
Congresswoman Adams. How am I recorded, Madam Chair?
Ms. Adams is requesting how she is recorded.
Miss Adams, you are not recorded.
Please record me as aye.
Congressman Mooney votes no. Oh, we're just randomly voting now? Madam Chair, this is.
I was
Apparently.
recognized,
Miss
sir.
Adams votes aye.
Thank you.
Madam Chair, this is Vicente Gonzalez. How am I recorded?
Can we not follow the
Mr.
roll? Madam Chair, decorum.
Continue the roll call, please. There is a request of, from Mr., who was that? Gonzalez, who wants to know how he was recorded.
Mr. Gonzalez, you are recorded as no. Mr. Gonzalez of Texas, you are recorded as no.
I would like to change my vote to yes.
Mr. Gonzalez off no on aye. And continuing with the roll call,
The clerk will continue the roll call.
Mr. McHenry. Mr. Lucas. Mr. Posey.
No.
Mr. Posey votes no. Mr. Huizinga. Mr. Huizinga votes no. Mr. Williams of Texas. Mr. Emmer.
No.
Mr. Emmer votes no. Mr. Zeldin.
Nope.
Mr. Zeldin votes no. Mr. Loudermilk.
Loudermilk votes no.
Mr. Loudermilk votes no. Mr. Mooney.
Mooney votes no.
Mr. Mooney votes no. Mr. Davidson.
Davidson votes no.
Mr. Davidson votes no. Mr. Budd.
Bud votes no.
Mr. Budd votes no. Mr. Hollingsworth. Mr. Hollingsworth votes no. Mr. Stile.
Style votes no.
Mr. Stile votes no. Mr. Gooden.
Votes no.
Mr. Gooden votes no. Mr. Taylor.
Taylor votes no.
Mr. Taylor votes no. Mr. Norman.
Norman votes no.
Mr. Norman votes no. Madam Chairwoman.
Madam Chair,
How am I recorded?
You are not recorded, Madam Chairwoman.
Are you sure I'm not recorded? That's okay.
Madam Chair.
The chair votes aye.
Madam
Madam Chairwoman votes aye.
Madam Chair, it's Jim Himes.
Mr. Cleaver, you are not recorded.
Cleaver votes aye.
Mr. Cleaver votes aye.
Madam Chair, if I could ask how Sessions is recorded?
Mr. Sessions, you are recorded as no.
Thank you.
It's Jim Himes. How am I recorded?
Mr. Himes, you are not recorded.
I vote yes.
Mr. Himes votes aye.
Madam Chair, it's McHenry. I wish to be recorded as a no vote.
Mr. McHenry, you are recorded as no. Mr. Williams?
I'm a no. Thank you.
Mr. Williams votes no.
Will the clerk continue to call the roll of all of those who have not responded? Based on the roll call, it appears that all members who are present have voted. Does any member wish to change his or her vote? If not, the clerk will report. I have to announce it whatever way it goes, right? For example, not when we... Clerk will report.
With that vote, Madam Chairwoman, we have 24 ayes and 23 noes.
A majority having voted in favor of the motion, the motion is adopted and the appeal is tabled. Is there further discussion of or amendment to the amendment in the nature of a substitute? For what purpose does the gentleman from North Carolina seek recognition?
Who? We don't have anybody. Yeah, we don't have.
Who are you? If there is no further amendments without objection, the previous question is ordered on HR 4495 and Is there further discussion of amendment to HR 4495? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a
Madam
substitute
Chair.
is agreed to. The question now occurs on ordering HR 4495 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes have it.
Madam Chair,
For what,
I asked for
who
a
seeks
recorded.
recognition?
I asked for a recorded
A
vote.
recorded vote has been requested. Pursuant to Section C5 of Committee Rule 3, the vote on this question is postponed. Pursuant to notice, the chair now calls on HR 3111, the Grandfamily Housing Act of 2021. The clerk will report the bill.
HR 3111, a bill to provide grants to owners of intergenerational dwelling units and for other purposes. Be it enacted by the Senate and House of Representatives of the United States.
Without objection, the first reading of HR 3111
Chair.
is dispensed with. Who seeks recognition?
Not yet.
The gentlewoman from Massachusetts, Ms. Pressley, a co-sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to HR 3111, offered by Ms. Pressley of Massachusetts. Strike all after
Without
the-
objection, the amendment in the nature of a substitute will be considered
Chair.
as read.
Madam Chair, I object to the ENS being considered as base text.
The objection is heard. The amendment in the nature of a substitute will not be treated as base text and will instead be treated as a first-degree amendment. I now recognize the gentlewoman from Massachusetts for 5 minutes to explain the bill and her amendment.
Thank you, Chairwoman Waters, for holding this markup and considering H.R. 3111, the Grandfamily Housing Act legislation, which I am proud to lead in partnership with my dear friend and colleague, Representative Jim McGovern. This bill is informed by the lived experiences of grand families across the Commonwealth and our nation. Today, nearly 3 million children are being raised by their grandparents, and a recent study found the number of Americans living in a multi-generational household has quadrupled over the last decade alone. The data shows that this number will continue to grow, in large part due to the opioid epidemic, which continues to destabilize families and decimate our communities. For children whose parents are unable to care for them, grandparents are often the ones stepping in to take on caregiving responsibilities, helping to mend hearts, to heal trauma, all while navigating the demands of schoolwork and rising living costs on a fixed budget. Adding to these challenges, less than 1/3 of eligible grand families receive housing assistance, and the majority of subsidized and market-rate senior residents do not permit children in their buildings. All these factors contribute to a devastating statistic. Almost half of every low-income renter grandparent-headed household spends more than 50% of their income on rent. This is unsustainable. This is unjust. And this is what our bill aims to fix. The Grandfamily Housing Act would provide funding to nonprofits and local housing authorities working to provide a safe living space for grand families and support the infrastructure of necessary wraparound services multi-generational families need to survive and to thrive. Our bill has the support of key advocates and trusted voices who work directly in support of grand families, including Generations United, Leading Age, the National Council on Aging, and the Massachusetts Commission on Grandparents Raising Grandchildren. I would also like to thank the many colleagues on this committee, Representatives Adams, Garcia, Chewy, and Sylvia, Scott, and Torres, who have already supported this important bill. For too long, our nation has failed to recognize the contributions of grandparents raising grandchildren and to provide them with the resources and support they need. It's time to change that. With these multiple crises destabilizing our families, from the opioid pandemic to the ongoing public health crisis of COVID-19, it is especially critical that we support the grandparents who are assuming caregiving responsibilities in these unprecedented times. I urge the remainder of my colleagues to support this bill, and I yield the balance of my time.
Is there further discussion of or amendment to the amendment in the nature of a substitute?
Madam Chair, I have an amendment at the
What
desk.
purpose does the gentleman from Missouri seek recognition?
I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically.
Madam Chair, surely everybody's got the amendment by now. Can we proceed? It was fiscal or some other room for some reason.
It's been distributed.
Have all members received the amendment? If so, the clerk will report the amendment.
Amendment to the amendment in the nature of substitute to H.R. 3111, offered by Mr. Lukemeyer of Missouri. Add at the end.
Madam
Without
Chair,
objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain their amendment.
Thank you, Madam Chair. This is a very simple amendment that is designed to address the biggest concern facing American families and small businesses today, which is inflation. This amendment delays the implementation of this bill until the HUD Secretary certifies that wage growth has surpassed inflation. Every month we get more numbers on inflation, and every month the results seem to be the same. The dollars in our constituents' pockets do not go as far as they used to. One silver lining for workers during the pandemic is that wage growth has gone up significantly as well. The nominal wage growth numbers from St. Louis Fed in May showed a 6.1% year-over-year increase. That's the good news. The bad news is that the May Consumer Price Index report released this month showed prices increased 8.6% year-over-year. That is much higher than the prognostication of many economists and is devastating for every American family. What these numbers tell us is that while wages have gone up, the value of paychecks is still going down. I urge my colleagues to talk to the people and businesses in your district and get a sense of the impact of inflation. This impact is crushing families and businesses across this country. For example, Executive Wood Products in Sullivan, Missouri is a small business that makes wood podiums and anti-ballistic furniture. Paul Alexander, founder and president, told us that raw material prices have gone up an average of 30%. Furthermore, he said that by the time he quotes a product, sends a quote to the customer, and the customer sends a quote back, the price of raw materials has increased so much that the quote is no longer accurate, and his business has to absorb those losses. Then there's Old Time Produce, a woman-owned, locally fresh food distributor in St. Charles, Missouri that serves the greater St. Louis area and its restaurants, hotels, hospitals, and schools with fresh food and produce. I visited with them earlier this month, and Joan DeLeo, the president of the company, said that inflation has not only impacted the price of goods, but that even equipment leasing contracts are now being linked to the CPI or other inflationary measures. Businesses in these contracts cannot raise prices enough to keep pace with dramatic increases in inflation. And lastly, I will mention Missouri Meerschaum Company, a Washington, Missouri company that makes corncob pipes. They had to increase hourly wages by 20%, but at the same time, the cost of anything wood-related, including corrugated boxes, has gone up 50% minimum, a double hit to the company. There are millions of businesses and Americans who have similar stories, and there are thousands in every district. If you've not been hearing these stories from home, allow me to share some information with you. Every month, the members of the Small Business Committee get an update from the Job Creators Network on a monthly survey that they conduct of small businesses. The latest numbers for May are alarming. Number one concern among small businesses is inflation and higher prices. 73% of small businesses do not believe the Biden administration is doing enough on inflation. 33% of small businesses said they have already raised their prices, while 42% anticipate raising prices in the future. Despite the immense concern from small businesses across the country, the majority here in Congress refused to address the scourge of inflation. Not one of the bills this markup is aimed at lowering inflation. Instead, we're still debating their efforts to raise taxes, increase spending, and add regulations, all of which will only make inflation worse. This amendment would at least ensure that Americans get to a point where the wage they earn can at least buy their families what it used to. As we heard earlier this morning, yes, now it's afternoon, the wages have actually gone down with their buying power by 3.4%. So what we need to do is have HUD stop to make sure that we're not putting people in the position of purchasing a home and then being unable to pay for it due to the lost purchasing power of their salaries. The single largest issue facing the American economy and the pocketbooks of American families is inflation. So it should be the focus of this committee. The least we try to do, at least we should try and ease that burden. With that, I urge my colleagues to support this amendment, and I yield back.
The gentleman yields back. The gentlewoman from Massachusetts, Ms. Pressley, is recognized for 5 minutes to strike the last word.
Madam Chair, I move to strike the last word. Madam Chair, in addition to serving on FSC, I'm a vice chair for the Task Force on Aging and Families. And we know that the number of Americans living in multi-generational households has quadrupled over the past decade, and it is only growing. These are people in the twilight of their years on fixed incomes, already struggling to make ends meet, and now have the added responsibility of kinship care. We owe it to them to give them some relief, and that relief should not be delayed one moment further. This amendment is a distraction amendment. It has nothing to do with grand families. It does nothing to offer them support. In fact, it does the opposite. And this amendment would make grand families wait even longer for relief during this period of inflation. I urge my colleagues to support this bill, and I yield back.
All those in favor of the amendment say, oh, no, we want to take our vote first. We're going to take the vote first. All those in favor of the amendment say aye. Those opposed, no? No? Which one? Is there further debate on the amendment? If not, the question occurs on the amendment by Mr. Lukamar. All those in favor of the amendment say aye. Those opposed, no. In the opinion of the chair, the noes have it. The noes have it, and the amendment.
Madam Chair, I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted.
You want it now again?
There is a sufficient second, and a recorded vote is so ordered pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion of our amendment to the amendment in the nature of a substitute? If there are no further amendments without objection, the previous question is ordered on H.R. 3111, and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. We will take a brief recess to allow members to vote on the floor. We will resume immediately following this vote series. The committee stands in recess. You ready, girl? The committee will come to order. Pursuant to notice, the chair now calls up H.R. 7977, Promoting Opportunities for Non-Traditional Capital Formation Act. The clerk will report the bill.
H.R. 7977, a bill to amend the Security Exchange Act of 1934 to require the advocate for small business capital formation.
Without objection, the first reading of H.R. 7977 is dispensed with. I have an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 7977, offered by Ms. Waters of California. Strike all after the...
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for
Madam Chair.
purposes of further amendment.
Madam Chair. Madam Chair.
Who seeks recognition?
Huizinga, I would like to object to that adoption and object to the ANS being considered as base text.
Gentleman is recognized. Oh, which one?
He's objecting to this as base text.
Okay, all right. The objection is heard. The amendment in the nature of a substitute will not be treated as base text and will instead be treated as first-degree amendment. I now recognize myself for 5 minutes to explain my bill and my amendment. Small businesses, businesses owned by people of color, and those in rural areas face a number of challenges when seeking capital. Experts who have testified before our committee have explained that small minority-owned and rural businesses are often unable to secure funding from traditional sources, such as money from friends and family or from a bank or credit union. These businesses also lack access to venture capital. Rural businesses receive less than 1% of all venture capital, and Black and Latinx firms receive about 1.2 and 2.1% respectively. These challenges in accessing capital dampens the survival and growth of these businesses. In addition to a capital gap, there's an information gap for these businesses in knowing about such capital formation avenues. The Office of the Small Business Advocate at the SEC was created so that small businesses can access capital and opportunities through activities overseen by the SEC, such as equity crowdfunding. My bill will ensure that the Office of the Small Business Advocate actively hosts events and reaches out to underserved and rural business owners so they might leverage these non-traditional capital formation avenues, and most importantly, continue to grow and expand their businesses. This legislation is supported by a number of groups, including the North American Securities Administrators Association, the International Urban League, Color of Change, NAACP, U.S. Chamber of Commerce, and the Small Business Investors Alliance. So I urge my colleagues to support this bill, and I yield back the remainder of my time. Is there further discussion of?
Madam Chair.
Amendment 2, the amendment in the nature of a substitute?
Madam Chair.
For what purpose does the gentleman from Michigan seek recognition?
I move to strike the last word. And I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, the clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 7977, offered by Mr. Huizenga of Michigan. Add at the end of the following.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain their amendment.
Well, his amendment is this. American workers and small business owners continue to feel the effects of the Democrats' policies in every aspect of their day, but particularly at the gas pump. As we sit here today, gas prices are at $5 a gallon in much of the country, truly historic levels. Further, in the first full week of this month, gasoline sales at U.S. stations were down over 8% compared with the same week last year, the 14th consecutive week that sales lagged behind 2021 levels. Now, I understand that that might actually be the goal of some of my Democrat counterparts, but it's deeply damaging to consumers and to small businesses. Let's examine for a moment how that might impact a family in my home state of Michigan, where I might add, gas prices are higher than the national average, hovering around $5.15 a gallon. So for the average hardworking taxpayer in Michigan who works an 8-hour shift and then fills up their 13-gallon tank in Ottawa County on the way home, they end up with less than $20 in their pocket for a day's work, and that's before taxes. Now, if they happen to drive an SUV or a pickup to work, you can double that expense, meaning that they worked literally for nothing. Nowhere in the country has felt a recent surge in gas prices more than Michigan. According to AAA, which tracks more than 85,000 gas stations nationwide, Michigan had the highest average weekly gas price surge of all states. A year ago, gas hit $3 a gallon. Today's price at the pump has increased an astounding 73%. Now, I understand Democrats would like to point the finger at the Russian invasion of Ukraine, but in reality, gas prices were rapidly on their way up long before Vladimir Putin invaded the country. So, as we sit here today, debating bills that are not really relevant to concerning most Americans, residents in West Michigan face record gas prices. I certainly don't need to tell the chairwoman that high gas prices are being felt everywhere. All we need to do is look no further than her home state of California, where gas prices hit $6.40 a gallon in Los Angeles County. My amendment aims to refocus the conversation, and until the Securities and Exchange Commission determines that inflation has returned to the normal rate of 2% a year, the provisions of this bill shall not take effect. I will remind you that the Office of Small Business Advocate lies within the SEC. Let me offer you one more example of how dire this situation has gotten. Last week, the Detroit Free Press ran a story about a local sheriff in central Michigan, Isabella County, who had already exhausted 96% of his annual fuel budget with 3.5 months to go. Allegan County, which is going to be in the new 4th District and just lies below my home county, is dealing with a similar situation, as are the state police. In response, deputies have now been instructed to manage calls wherever they can by phone. Let me just let that sink in for a moment. I think what is lost in this debate is the impact that rising gas prices have on our local communities, especially those who are struggling to recover from the last couple of years. These communities' budgets are already stretched, and in the end, they'll have to decide which government services get funded and which ultimately will not. The bills that we are debating today will do nothing to lower energy prices. They'll do nothing to ease the pain at the gas pump. They'll do nothing to help American, hardworking, tax-paying American families' lives better. So before concluding, let me leave you with one more statistic. The Washington Post reported last week that AAA took 50,787 out-of-gas calls in April. In April alone, a 32% jump from the same month last year. Families all across the nation are facing difficult choices. Do I fill up my car with gas, or perhaps fill my prescription? Or maybe put food on the table? We as a committee can do better. Frankly, we must do better. And with that, I yield back the balance of my time.
The gentleman from West Virginia, Mr. Mooney, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I'd like to strike the last word. And I thank you, Representative Huizenga, for offering this amendment. High gas prices are a crisis for my constituents in West Virginia. Democrats like to talk about electric vehicles, but the reality is that less than 1% of cars in the United States run on electricity. When it comes to powering the vehicles that take our constituents to work, school, soccer or rugby practice, and everywhere else, our constituents need gas. So I'd like to take a moment to read a letter I just received earlier this month from one of my constituents from Elkins, West Virginia, on the dire effect of this gas crisis. And I quote, "People are being forced to make the decision to either put food on the table or food in their vehicle to get to work. Living in Elkins, most people that are working have to drive up to 60 miles per day to get to their job to support their family. My constituents are," and that's the end of the quote, close quotes. "My constituents are hurting, especially those who drive to work to earn a living. Congress and this committee needs to refocus its goals to help hardworking taxpayers who are trying to earn a living. That is why I rise in support of this amendment today for my good friend Bill Huizenga. The concept is simple. None of the provisions of the bill go into effect until after the gas prices return to normal levels. This Congress and the Biden administration both need to reevaluate their priorities. This amendment would be a good start. Let's work together and focus our efforts on solutions that will bring the price of gas down and really affect the bottom line for West Virginians, Californians, and everyone in between. Thank you, Madam Chair, and I do yield back the balance of my time."
I now recognize myself for 5 minutes. Here we go again. My Republican colleagues who claim to support small businesses are doing everything they can not to vote to support small businesses. My bill would make a narrow change to the mission of the Small Business Advocate, an office originally championed by a Republican on this committee to provide assistance to underserved small businesses. That's right. My bill only seeks to help small businesses that have been left out of our capital markets, and yet Republicans are again trying to politicize their pain. The Black and brown entrepreneurs, rural business owners, and veteran-owned business owners I'm focused on today feel the pain at the pump and at the grocery store, but unlike many of their white peers, also feel it when they seek a loan or capital to grow their businesses. It is simply cruel to make them wait for assistance from the SEC until gas prices, which are not determined by the government, but by market forces, and at the moment by President Putin, who is waging an immoral war in Ukraine. I know that the last president was very sympathetic to Putin. That's an understatement. But I am not, and Americans are not. Republicans had an opportunity to support lower energy prices, but voted against H.R. 7688, the Consumer Fuel Price Gouging Prevention Act. They also rejected bills to lower infant formula and food prices. Democrats are doing everything possible to ease gas prices, from releasing 1 million barrels of oil from the strategic reserve to proposing a gas tax holiday. This amendment is not a serious attempt to solve a problem, but instead to punish struggling small business owners. So I urge my colleagues to oppose this amendment, and I yield back the balance of my time.
Madam Chair.
Who seeks recognition?
Bar, Kentucky.
Gentleman is recognized for 5 minutes.
Move to strike the last word. Just very briefly on the argument that the previous president was sympathetic to Putin. Remember, Vladimir Putin chose the timing of his invasion of Ukraine, and it wasn't during the previous administration, it was during the current administration. And the reason is because the previous administration established deterrence. The current administration removed deterrence. The previous administration applied sanctions on Nord Stream 2. The current administration waived sanctions on Nord Stream 2. The previous administration sent tomahawks against Putin's ally Bashar al-Assad into Syria. This administration did nothing when the renegotiation of the START treaty happened. The previous administration had a conditions-based withdrawal plan for Afghanistan that stood by our allies. The current administration withdrew unconditionally and left our allies high and dry, signaling to Vladimir Putin we would not stand by our friends in Ukraine. The previous administration deterred Vladimir Putin. The current administration invited aggression from Vladimir Putin. And what is the result? The result is the worst inflation in history. The result is $5 a gallon gasoline, an all-time high, not just because this administration has declared a war on domestic energy production, but also because of Putin's invasion of Ukraine. Now, let's be clear, Biden presided over the largest year-over-year rise in gas prices in at least 30 years before the invasion of Ukraine. That has been exacerbated, of course, by Putin's invasion, but make no mistake about it, this administration's decision to rejoin the Paris Climate Agreement, block construction of Keystone, halt new lease sales for oil and gas, stonewall over 4,400 permits to drill, thwart new large-scale refineries have all contributed to constrained energy supply, pushing up prices at the pump. But ground zero in this war against domestic energy production and this inflation that is out of control at the pump is the Biden administration's weaponization of financial regulation to redirect capital away from fossil energy. Support Mr. Heisinger's amendment. Stop Biden's inflation at the pump. My constituents can't afford out-of-control gas prices. No American can afford it. This is Biden's problem, and we need to support Mr. Heisinger's amendment. I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment by Mr. Heisinger. To my amendment, all those in favor of the amendment say aye. Those opposed, no. In the opinion of the chair, the noes have it, and the amendment is not agreed to.
Madam Chair, I request a recorded
A
vote.
recorded vote has been requested. All in favor of a recorded vote should raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of our amendment to the amendment in the nature of a substitute?
Madam Chair.
For what purpose does the gentlewoman from New York seek recognition?
I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, the clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 7977, offered by Ms. Velasquez of New York.
Without objection, the amendment will be considered as read. The gentlewoman is recognized for 5 minutes to explain their amendment.
Thank you, Madam Chair. And as Chair of the House Small Business Committee, let me thank you for working with me on this amendment and for your continued advocacy to promote capital formation and access to credit for America's small businesses and entrepreneurs. My amendment is simple. My amendment adds small business affected by hurricanes or other natural disasters as an additional category for which the SEC's advocate for small business capital formation must provide educational resources and host events to promote capital raising options. I offer this amendment because as chair of the House Small Business Committee, I understand that small businesses are the lifeblood of many communities around the country, and I have witnessed firsthand the terrible impact hurricanes and other natural disasters can have on the economic outlook for small businesses. For example, 6 months after Superstorm Sandy rocked the tri-state area in 2012, including several of the many communities and neighborhoods I represent, as many as 100,000 small businesses continue to struggle, according to the U.S. Chamber Foundation. Additionally, a survey conducted by the Hartford after the storm reported that 52% of small businesses surveyed lost sales or revenues, 44% had to close for at least 4 weeks, and 44% reported supplier issues. For small businesses in Puerto Rico in 2017 and 2018, the situation was much worse. The effects of Hurricane Irma and Maria on Puerto Rico small businesses were unprecedented. The Federal Reserve Bank of New York published a report of Puerto Rican small businesses in September 2018, almost a full year after the hurricane struck the island, and found that 77% of Puerto Rican small businesses self-identified as having incurred a loss directly from the hurricanes. The financial impact of the hurricanes took various forms on the island's small businesses. 71% reported decreased revenues, 66% reported increased expenses, 53% reported damage to firms' assets and property, and 48% reported increased indebtedness. While a majority of affected businesses held some type of insurance, few were fully recovered. And a year later, microloans of $50,000 or less were in high demand, and most small businesses that applied for financing in the aftermath of the hurricanes were still seeking additional funding to restore their business operations. But this amendment is about more than just New York, New Jersey, or Puerto Rico. This amendment will serve to drive private capital to small businesses in all areas of our nation that are impacted by hurricanes, drought, wildfires, and other natural disasters in the future. For example, about 99% of the companies in Houston, Texas are considered small businesses, and most of them do not have the same economic resources as the state's massive oil and medical industries. As a result, these small businesses face a long and expensive road recovering from Hurricane Harvey in 2017. This amendment seeks to shorten the recovery for these small businesses in the future as well. FEMA estimates that nearly 40% of small businesses never reopen after a disaster. Weather-related events due to the effects of climate change are becoming a more common occurrence, and something we must continue to grapple with as a country, whether they be in the form of hurricanes or flooding or deadly wildfires caused by extreme heat and drought. And one of the most effective ways the SEC can play a role in helping a community recover from these events is to develop strategies and promote capital raising options that drive private capital to a community's small businesses. I again want to thank the Chairwoman for authoring the underlying legislation and for coordinating with me on this important amendment. I urge its speedy adoption. Thank you. I yield back.
Thank you. Is there further debate on the amendment? I recognize myself for 5 minutes. I support this amendment offered by Mrs. Velasquez to also direct the small business advocate to reach out to business owners who have been affected by hurricanes and other natural disasters. It is unfortunate, but for years, Republicans have blocked efforts to do anything with regard to climate change. We are experiencing some of the worst heat waves, wildfires, flooding, and storms in a generation. To recover, these businesses should also be aware of resources to build back their capital and help their communities recover. I must warn my colleague from New York, however, that you won't see any bipartisan support for those struggling businesses. Mr. Barr just tried to blame the war in Ukraine on President Biden, and I would likely also try to blame his to blame his indigestion on President too, if he could. Nevertheless, I support this amendment and yield back the balance of my time. Is there further debate on the amendment?
Strike the
If
last
not,
word.
the question
last
occurs on the amendment by Ms.
Like to strike the last word.
Velasquez. To my amendment. All those in favor of the
Madam
amendment
Chair.
say aye. Aye.
I've been trying to strike the last word for the last 10 seconds. I'm curious about Andy's indigestion.
All right, if he was trying to get my attention.
Yes.
The gentleman from Ohio, Mr. Gonzalez, is recognized for 5 minutes to strike the last word.
I'd like to yield my time to Mr. Barr from Kentucky.
I appreciate the gentleman's yielding, and I appreciate the gentlelady, the chairwoman's concern about my digestion, but it's fine right now. Thank you very much. But what I do want to make one final point, and that is that what none of us can digest is the fact that while the previous administration put this country in a position not just of energy independence, but energy dominance that kept energy prices low and affordable for middle-income Americans, low-income Americans, Americans who cannot afford skyrocketing electricity bills, brownouts, blackouts, and the painful $5 a gallon gas at the pump. But the fact that this administration surrendered that advantage, that economic and geopolitical advantage. And so, yes, one of the factors in the war in Ukraine is not just the fact that this administration removed deterrence, but the fact that this president's policy surrendered our position as energy dominant, and we became more interested in begging Venezuela and Iran and Saudi Arabia for oil and rejecting production in Alaska and Oklahoma and in Texas. To me, that makes absolutely no sense. And as we reduce our energy independence, that drives up the cost of global energy prices, and guess what happens? Vladimir Putin's pockets are lined, and that finances the war in Ukraine. So even on the issue of Ukraine, this president's policies have invited this crisis on the American people. And with that, I yield back.
Yield back.
The gentleman yields back. Is there further debate on the amendment? If not, the question occurs on the amendment by Ms. Velasquez to my amendment. All those in favor of the amendment say aye. Aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it. The ayes have it, and the amendment is agreed to. Is there further discussion of the amendment in the nature of a substitute? If there are no further amendments, without objection, the previous question is ordered on H.R. 7977 and pursuant to to Section C5 of Committee Rule 3. Further proceedings on the pending amendments are postponed.
Pursuant to notice, the chair now calls up H.R. 6814, the Small Business Fair Debt Collection Protection Act. The clerk will report the bill.
H.R. 6814.
Without objection, the first reading of H.R. 6814 is dispensed with. The gentleman from Florida, Mr. Lawson, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature
Without
of...
objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further...
Madam Chair, Mr. Chairman,
Yes.
I object to the ANS being considered as base text.
The objection is heard. The amendment in the nature of a substitute will not be treated as base text and will instead be treated as a first-degree amendment. I now recognize the gentleman from Florida for 5 minutes to explain the bill and his amendment.
Okay, thank you, Mr. Chair. H.R. 6814 is a good bill. As most of my colleagues might know, that I've been in the small business really all my career, about 34 years. The Small Business Fair Debt Collection Protection Act will protect small business from the harassment of third-party debt collectors. This bill encourages entrepreneurship and allows small business owners to have similar protection as consumers when we have to deal with debt collectors. Simply put, the bill provides the same protection to small businesses that they provide for consumers. Small business owners use their personal finance and capital to start and expand their businesses, and I've had to do it on a number of occasions. Owners often apply for business credit using their personal credit, yet currently small business and loan borrowers do not have the same protection individual consumers have under the federal law. These protections are especially important to women and minority small business owners who are particularly vulnerable to predators' practice because they are less likely than other owners to have the capital resource and network to support necessary to protect themselves against abusive collector. Small business are the backbone of our economy. With over 30 million small businesses across the United States, it's important and imperative, that we protect them from harassment debt practices by unscrupulous debt collectors. And I urge my colleagues on this committee to pass this bill. This is a great bill, and those of you, and I know we have a lot of people who have been in business like I have before I came to Congress, and we're really still in business. But what happens is this happens all the time. And this is one way to give small business owners the same protection that we give consumers. With that, I yield back.
Is there further discussion of or amendment to the amendment in the nature of a substitute?
Mr. Chairman,
Gentleman from Kentucky is
I
recognized.
have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? We'll wait. Have all members received the amendment? If so, the clerk will report the amendment.
Amendment to the amendment.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain the amendment.
Thank you, Mr. Chairman. This straightforward amendment would simply make this legislation, the act's effectiveness, contingent on the Fed finally meeting its inflation target of 2%. And only when the Fed achieves that price stability mandate would the legislation go into effect. The reasoning is pretty straightforward. Inflation levels are at an all-time high. The CPI number released earlier this month was 8.6%, the highest level in more than 40 years. Prices are accelerating at a rate we have not seen since the 1980s. Fuel oil is up 106%, the highest ever. We just talked about Mr. Heisinger's amendment where we discussed the cost of gasoline up almost 50% year over year, over $5 a gallon for regular unleaded gasoline. Diesel even higher. Groceries up 11.9% year over year, the biggest increase since 1979. Americans are paying over $5,200 more this year for the same goods and services. And look, these historic numbers are hindering the abilities of our constituents across the country to just simply drive to work or buy food for their families. The underlying legislation is about small businesses. Well, let's talk about the effect of inflation on small businesses. If we really want to help Main Street mom and pops, the entrepreneurs of this country, actually make ends meet and get by and meet payroll and provide the goods and services to their customers without raising prices, we've got to get wholesale prices down. The PPI is even higher. So if you think about it, these small businesses are getting hit worse than households because the PPI, the producer price index, wholesale prices are even higher. The small businesses in my district are trying to take a hit on behalf of their customers because the PPI is higher than the CPI. I'll give you a few examples. The Suffaletta family from Georgetown, Kentucky, who have been in the retail home furnishing business for 3 generations, a business that's been operating since the 1940s, informed me that the cost of goods from their manufacturers increased 30 to 40%, and their cost of labor and overhead have gone up 25%. Or a painter in my district from Nicholasville, Kentucky, Gerald Holland, who tells me that a can of paint is $20 more today at wholesale than it was the day Joe Biden took office. Or Charlie Masters, who just last Friday, a farmer in Fleming County, Kentucky, he said, Congressman, I don't know how the Department of Labor, these bureaucrats in Washington, come up and concoct these numbers of 8.6%. And I know that's a historic 40-year high in the minds of the people in Washington, D.C., but here in Fleming County, Kentucky, let me tell you, it sure doesn't feel like 8.6%. What it feels like is more than twice 8.6%. And he explained how he can't afford the diesel fuel that goes into his tractor just to operate his business or the fuel that needs to go into his mowers. So look, if you really want to help the small businesses of this country, we need to reverse course, stop the spending spree, start producing domestic energy, deal with the supply-demand mismatch that has been created by bad fiscal policies. And I just have to add a final point about the underlying legislation. The underlying legislation would actually exacerbate inflation for small businesses. The bill will drive up the cost of credit and limit the availability of financing for small businesses. At a time of record inflation on Main Street, these businesses need credit. They need financing. And this bill would treat commercial debt obligations in the same manner as consumer debt and subject commercial debt collection to supervision and enforcement by an agency that doesn't have jurisdiction or the capability, expertise in any way to deal with commercial debt. It's the Consumer Financial Protection Bureau, not the Commercial Small Business Protection Bureau. And this bill would increase frivolous lawsuits for commercial debt collection, and restricting the ability to collect debt not only increases the safety and soundness risks for the entire financial system, but it's going to drive up the cost of credit for small business borrowers. At a time of record inflation, what a disastrous policy that would be. So I urge my colleagues to support the amendment. Let's make sure the Fed does its job first and meet its inflation target of 2% before we jump in to a bill like this, which in and of itself would drive up the cost of credit and exacerbate the inflation crisis for small business Americans. So on behalf of my constituents, the Cephaletta family, Gerald Holland and Charlie Masters, I urge this committee to support my amendment and oppose the underlying legislation, and I yield back.
Is there further debate on the amendment?
Mr. Chairman, I move to strike the last word.
The gentleman is recognized.
Mr. Chairman, I can appreciate the enthusiasm from Mr. Barr, but I can tell you is that over the last 30-some years, that's all I worked with small businesses in every category, in the financial area and as well, in the insurance area. And I know what I'm talking about in this particular area. And I know what is important. There's no reason for a delay. I don't know whether, but there might be some members who are serving right now understand exactly why this debt collection protection action is part of a small business. I've seen it over and over again. I don't have any of my small businesses that I still service. I'm not able to do anything with them but provide service for them through my office. Would want to do what this amendment does. This is a bad amendment. At this particular time, when Mr. Barr talks about business are hurting and we don't want to do this and that, debt collectors are hurting our small business tremendously. And when the consumer is the one that the small business deal with, they get a better deal than the small businesses. And there's no reason if we talk about how small business is the backbone of America, the 30 million or so that we have. And at the same time, if anybody on this committee has been dealing with, we do not need a delay. This is a bad amendment. This is a bad amendment and it should be rejected. I hope many of my colleagues have had the opportunity to work with small businesses like I have. I worked with small businesses since 1982. And I know exactly, the problem that we have. I could give you hundreds of names of small business in any category, to tell you the problem that they have. And if you really want to help businesses during these particular times, just put them where they can have the same opportunity with these debt collectors as the consumer does. Who are we hurting? We hurting the small business that work with the consumer. So I urge my colleagues to reject this amendment that is being offered and to support this bill. And I yield back.
Is there further debate in the amendment? I recognize myself for 5 minutes. I oppose this second attempt by Republicans to delay aid to small businesses and support H.R. 6814, the Small Business Fair Debt Collection Protection Act, led by Representative Al Lawson. Small businesses make up the backbone of our nation's economy, driving job creation in districts throughout the United States. Yet many small business owners face challenges accessing the capital they need to start or grow their business. Borrowers looking for capital to start a small business usually rely on their personal credit, yet are not protected against predatory practices in the same way as individual consumers. This lack of protection leaves small business owners vulnerable to aggressive practices employed by debt collectors. These entrepreneurs have to spend time, resources, and energy away from their small business defending themselves, and often do not have an army of accountants or lawyers to help them deal with harassment and abuse from predatory debt collectors. Members of this committee will remember how New York taxi cab drivers were poorly treated by predatory medallion loans and then were subjected to abusive debt collectors. In one example, a debt collector impersonated a police officer and displayed a gun while seizing a taxi cab driver's vehicle under questionable circumstances. Representative Lawson's bill will ensure that small business owners have the same protections as individual consumers with respect to debt collection so they can focus on growing their business. Nevertheless, Republicans are once again trying to change the conversation and are only going to harm small businesses by allowing debt collectors to swindle them where they are already feeling the pinch of inflation. Ironically, Republicans, who have long sought to eliminate the CFPB altogether, are trying to expand the authority of the agency to make economic decisions related to inflation. Mr. Lawson's bill is supported by the National Association of Latino Community Asset Builders, Small Business Majority, Main Street Alliance, National Urban League, and the Responsible Business Lending Coalition. I urge my colleagues to reject the Barr Amendment and support H.R. 6814, and I yield back the balance of my time. The question occurs on the amendment by Mr. Barr to the amendment by Mr. Lawson. All those in favor of the amendment say aye. Aye. Those opposed, no.
No.
Opinion of the chair, the noes have it.
Mr. Chairman, Ask for recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? There are no further amendments. Without objection, the previous question is ordered on H.R. 6814, and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls up H.R. 5912 to close the ILC Loophole Act. The clerk will report the bill.
H.R. 59.
Without objection, the first reading of H.R. 5912 is dispensed with. The gentleman from Illinois, Mr. Garcia, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment. Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Illinois for 5 minutes to explain the bill and his amendment.
Thank you, Mr. Chair. I rise in support of my bill. The ILC Loophole Act, which will eliminate regulatory exemption that allows commercial firms to operate FDIC-insured banks as industrial loan companies or ILCs. I'd like to thank the committee and our broad coalition of community banks, credit unions, consumer groups, and trade associations for their unyielding support to close the ILC loophole. It's rare to see such a diverse coalition work together on any given issue, yet they came together to support this bipartisan bill because they understand the urgency to close the ILC loophole and the importance of maintaining the separation of banking and commerce. The ILC loophole allows commercial companies to operate ILCs. Just like traditional banks, ILCs can originate loans, take federally insured deposits, and do virtually everything that a regulated bank can, but without the same oversight and regulations that ensure fair dealing and protect financial stability. The federal government has recognized the problem with ILCs for a long time. We have conducted numerous studies and imposed multiple moratoriums. It's time to act. My bill will close the ILC loophole moving forward, grandfather existing ILCs with enhanced supervision, and provide a fair process for considering ILC applications that are still in process. Since I first introduced the bill last year, I've made a few changes to ensure broad support. The bill we are discussing today gives regulators, ILCs, and their parent companies considerable flexibility in adjusting to economic and technological changes. But every single change that I have made has kept our broad coalition intact. And today's bill protects our financial stability, safeguards consumer privacy, and promotes a level playing field. Given the financial instability that we see today with rising inflation and persistent supply chain issues, now is the time for Congress to act and ensure that our banking ecosystem remains stable. Let us not forget that a bill to close the ILC loophole passed in overwhelming bipartisan support in 2007, with Ranking Member McHenry and other Democrats and Republicans who remain on the committee to this day voting yes with 371 other members. The Senate's failure to act at that time resulted in billions of dollars in bailouts in failing ILCs during the 2008 crisis. Since then, the Federal Reserve has affirmed the position that ILCs pose financial stability risks and again recommended that the loophole be closed. Janet Yellen reiterated that same position in her testimony to this committee just last month. I'm very concerned about the consequences of Congress failing to act again and the very strong possibility that within the next 5 years, a future administration could sign off on dozens of new ILC charters, including to Amazon or Facebook, creating major financial stability problems. The bill addresses a critical threat to our financial stability, and preserves the separation of banking and commerce that has been a longstanding feature of the American banking law. This time is running out for Congress to take action in the ILC loophole. I appreciate the helpful feedback many of you have given me during this process. I'm proud to say that this bill addresses the concerns of many of my colleagues while tackling our underlying problem. I urge my colleagues to support this bill to close the ILC loophole. Thank you, and I yield back, Mr. Chairman.
Is there further discussion of or amendment to the amendment in the nature of a substitute? Is there further discussion of or amendment to HR 5912? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering HR 5912 as amendment to be reported favorably in the House. All those in favor say aye.
Aye.
Those opposed, no. No. In the opinion of the chair, the ayes have it. A recorded vote has been requested pursuant to Section C5 of Committee Rule 3. The vote on this question is postponed. The committee will take a brief 5-minute recess. The committee stands in recess.
Why is 5 minutes brief?
I call the committee to order. Pursuant to notice, the chair now calls up H.R. 4586, the Risk-Based Credit Examination Act. The clerk will report the bill.
H.R. 4586, a bill to amend the Securities Exchange Act of 1934 with respect to risk-based examinations of nationally recognized statistical ratings organizations, be it enacted by the Senate and House of Representatives of the
Without objection, the first reading of H.R. 4586 is dispensed with. The gentlelady from Missouri, Ms. Wagner, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 4586, offered by Mrs. Wagner of Missouri. Strike all after the
Without
enactment.
objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentlelady from Missouri for 5 minutes to explain the bill and her amendment.
I thank you, Madam Chairwoman. One of the factors that led to the 2008 financial crisis was investors' over-reliance on credit ratings to evaluate the risk of structured finance products. However, credit rating agencies are just one of many causes of the financial crisis. Between 2008 and 2009, the three largest rating agencies undertook a number of steps to reform the ratings process, including reviews of originator due diligence, improved ratings methodologies, and increased disclosures to investors regarding their ratings. In 2010, with the passage of Dodd-Frank, nationally recognized statistical rating organizations, or NRSROs, were hit with the new requirements aimed at enhancing their disclosures and transparency. Unfortunately, this blanket approach to annual reporting requirements mandated under Section 932 of Dodd-Frank placed unnecessary burdens and compliance costs on small credit rating agencies that were in no way responsible for the financial crisis. After the Office of Credit Ratings was created in 2012 and the new requirements went into place, smaller credit rating agencies have been burdened with increased compliance requirements that have put them at a disadvantage in the market. Chilled competition and further consolidated power among the largest credit rating agencies. Contrary to what some may think, more regulation doesn't solve everything. That's why I introduced H.R. 4586, the Risk-Based Credit Examination Act, with Congressman Foster. This bill makes the criteria required for annual reporting by national recognized statistical rating organizations risk-based. A move to a risk-based model will alleviate the burden on small credit rating agencies while continuing to maintain oversight and transparency over the industry. The marketplace needs this fix. Former SEC Chair Mary Jo White has spoken in support of the SEC moving to a risk-based approach. Likewise, former SEC Commissioner Gallagher has also previously highlighted how burdensome the Dodd-Frank regulatory requirements have been, and as a result, smaller credit rating agencies have to devote more resources to compliance than the largest credit rating agencies. I want to be clear. This bill does not eliminate reporting requirements for credit rating agencies. Instead, it simply makes the criteria required in annual reports risk-based. Credit rating agencies will still be held accountable while allowing real competition in the market. I want to take this moment, Madam Chairman, to thank Congressman Foster for joining me in support of this issue since we very first introduced this bill back in the 114th Congress. Congressman Foster has been a partner with me in this the entire time. So I thank you. I urge my colleagues to support this piece of legislation, and I yield back the balance of my time.
The gentlelady yields back. Who else seeks recognition? Mr. Stile is recognized for 5 minutes to strike the last word.
Thank you very much, Madam Chairman. It's nice that we're wrapping up today's hearing on a bipartisan bill, and I rise in favor of this bill. But let me tell you, there's been a lot of frustration over this hearing. I hope we come back and we start marking up legislation that addresses the energy crisis and the inflation crisis that we're seeing playing out. Because I walked away today knowing and hearing that I should go tell a woman in South Milwaukee that only's got $40 to fill up her car with gas, that life's even worse in Estonia. She can get a Peloton on the cheap. She's got toilet paper available at the grocery store again, and you can get hand sanitizer almost for free. Ridiculous. I hope we come back next time. We got bills we're marking up that address the crises that are actually playing out in the United States of America. I'm in support of this bill. Madam Chairman, I'll yield back.
The gentleman yields back. The chair recognizes, who else seeks recognition? Seeing no one seeking recognition, I recognize myself for 5 minutes. I support H.R. 4589, sponsored by Ms. Wagner, to help the Securities and Exchange Commission robustly oversee the credit rating agencies through more prudent annual examinations. Ms. Wagner's proposal ensures that the SEC continues its annual examinations of all credit rating agencies, but can now focus on the aspects of the rating agencies that pose the greatest risks to investors and our capital markets. I support passage of H.R. 4589. I congratulate her on her leadership and Mr. Foster, and yield back the balance of my time. Is there further discussion of any amendment to H.R. 4586? If not, the question now occurs on approving the amendment to the nature of a substitute. All those in favor say aye. Aye. Those opposed say no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 4586 as amended to be reported favorably to the House. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it. The ayes have it, and H.R. 4586 is agreed to. There being no further matters pending before the committee, the chair wishes to inform members that votes will occur at 1 p.m. tomorrow, immediately following the full committee hearing. We will vote on all postponed matters. The committee stands in recess.